down 7%, and now it's overhauled Barclays, which previously was the best performing bank.
Well, I think, you know, here's another way to frame it, which is you look at UBS perhaps facing a monumental hike in from the regulator. That's what we heard last week. Motti and Kelleher have always been in the holy grail within UBS. And here we are, maybe my return on equity and my dividend and my on a relative sense to UBS. Just food for thought. Talk to me about bonuses, because suddenly London attractive destination. I mean, they did adjust the comp in London when the bonus cap came in, which was to smaller bonus, but looks as if that has been upended.
Yeah, exactly. So you has now basically told banks, look, we no longer need to see that 2-to-1 cap that is still in place. Even though they've got a massive London operation, they still have to adhere to the EU cap, where basically your bonus can only be twice. So it's really interesting to hear the CFO speak on those things, because you know a lot of executives on the other side of the coin, the British lenders, is too late now. We've kind of established this other system. Do we really want to go back and reverse it? But now they are starting to go down that path. At a rival bank saying, hey, we're looking over our shoulders at this and wondering, could this be like a key sort of differentiator in that, you know, race for the top talent? It just goes to show that it's sometimes those regulatory shifts that can make all the difference.
Maybe the top talent has decided to go to Dubai. Tom, thank you very much. Tom Metcalf there. There's no income tax there at all for Europeans or Brits. Sector price.
We are looking at a decline for the S&P 500 right now of 1.4%, largely having to do with that Meta sell-off, making of sectors. So the fact that you have investors leaning toward the PepsiCos, the Procter & Gamble's, and a bit more defensive, risk off. You can see 10 of the 11 S&P 500 sectors are lower. Clearly, it's those mega cap. But the communication services, and yes, that is home to Meta, down 6% at one worst day since October of last year. This week, right now, we have this sector also heading to its worst week. At this point, we have just one stock that's trading up. No, all stocks within this sector are trading low.
Destruction in equity value, isn't it? Abigail, thank you very much. Coming up, we'll set your events for the rest of the day. Guess what? Harry on Bloomberg.
There's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
In 5 minutes' time at 10 a.m. Eastern, we have US pending home sales change month over month. Forecast 0.4% on the prior 1.6%. We also have US pending homes index, prior 75.6.
Geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
In market capitalization, $178 billion in the space of 2 days. That is an inauspicious backdrop to. And if you're hoping for rate cuts this year, dream on, because right now the market is repricing one cut, and that is the rest of the week. Pending home sales come in at the top of the hour. Alphabet, Microsoft report later today. Hit the tape, but it is about intervention watch from the Bank of Japan. They have a rate decision tomorrow. Sufficiently far to give us the wrath of the Ministry of Finance and the Bank of Japan. Yet enough to irk officials at the Bank of Japan. Countdown to the open. I think we talked enough about Meta. Tomorrow, take you through those results from Microsoft and Alphabet right here on Countdown to the Open. The team take you through the
US Treasury's Yellen says GDP data shows strength in consumer and investment spending.
The top names in global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in
Yellen
nature.
says there could be revisions to GDP data.
The way we see it, there has been a cultural change in Argentina. Today, wages are miserable, not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal
1 minute
economists,
remaining. I'll lead
they
with
were
US
all
pending home
false.
sales change month over month.
And we need to opt for a pure orthodox market-based solution.
Yellen says I still see in underlying core drivers of economic activity considerable strength.
In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
10 seconds. Free spot 4%, free spot 4%, higher than forecast 0.4%. US pending homes index 78.2, 78.2.
30 minutes into the US trading day on this growth, hot inflation, first quarter GDP.
Yellen says we're on a downward path for inflation.
Inflation accelerated. What's the Fed to do? We'll discuss. Marex's New York debut, the British commodities broker, begins trading on the. We'll talk through that decision with CEO Ian Lowitt. And Dow Chemicals will check in with CEO Jim. A drop in sales and adjusted operating earnings. He joins in just a bit. I'm Katie Greifeld in New York. Welcome to Bloomberg Markets. And it is a down day in the markets. 1.5%, and the story only gets worse if you take a look at big tech, with the NASDAQ 100 currently off by about 1. You know, a lot of that is coming from Meta reporting earnings last night. The stock is down double digits right now. That's market in addition to the economic data, which we'll get to in just a bit. But you look
Yellen
at how
says
it's
the US
filtering through
economy
the bond
continues
market
to
right now.
perform very well.
Higher by 8 basis points, firmly above 4.7% for the first time since to a nearly 2-year low.
Yellen says, I have no doubt that housing's contribution to inflation will be coming down this year.
Joins us now with the details.
And Yellen says we have a very good, strong job market. We're not seeing evidence that the labor market is a source of inflation.
Well, the problem, Katie, is that it isn't necessarily slow growth. On a headline basis, it is.
Yellen says we're not seeing that wage pressures are a source of inflation.
We'll go under the hood and take a look at what happened here. GDP came in at 1.6%. The around 2.5% to 3%, so weaker than expected. But underneath that, consumer spending worse than 0.5%, and if you do real final sales, 3.1%, still very strong. Business and the inventory build very small this quarter, kind of a surprise, and trade significantly, could be the strong dollar, and imports were up significantly, and that subtracted a lot from.
And Yellen says, I certainly don't see the US economy as overheated.
Federal government spending down for the first time in almost 2 years, probably because Congress and Ukraine military aid package. It was the inflation numbers, though. Is up 3.7%. The forecast was for 3.4%. What you want to look at, the white line and the blue line going, then you may market sell off tomorrow. Now we got some other news just breaking now. Pending home sales up 3.4%, a significant beat. The forecast was for just a 0.4 gain on a year-over-year basis, down 4.5%, worse than it was the last month. So home sales still in a bit of a difficulty because of mortgage rates. Although I'll tell you, Katie, what was interesting is on a percentage basis, home sales were up significantly in GDP, but on a dollar basis, they barely moved. When you're that low, it doesn't take much to move the percentages. That's
true, of course. And to your point, I mean, and the inflation numbers in today's GDP really moving the market. Somehow the stakes got even higher for tomorrow's PCE figures, which I'm sure we'll be talking with you about in 24 hours' time. Bloomberg's Mike McKee, thank you so much. And let's turn to these markets right now and the sell-off that is underway. We're going to do that with David Sowerby. He is Ancora Advisors portfolio manager. And I mean, you look at reactions right now. So we had disappointing earnings and now disappointing figures when it comes to the economy and what's going on with inflation. A lot of big questions for the Fed, a lot of big questions for people in your seat, portfolio managers. How are you thinking about markets at this juncture?
Katie, it always goes back to know what you own. When you look at the keys of cash flow, earnings, and too often forgotten, the health of the balance sheet. And in 2024, we're going to see free cash flow growth for the S&P 500 of 14 to 15%. That's still a very good backdrop for portfolio management, even in the face of slower GDP, higher inflation, a Federal Reserve monetary experiment that we're 3+ years into. We still don't know exactly how it's going to turn out when the Fed grows money supply at 25% and then has negative M2 money supply for the last year. It's still playing out in the economy, but I defer to companies still generating ample cash flow and double-digit dividend growth.
So is that the real focus for you, the real ticket, that cash flow growth versus earnings growth, for example?
It is simply because cash flow is a much cleaner metric. A lot can happen between revenue and earnings per share on the income statement. And in particular, free cash flow, which is after you do your capital expenditures for a company, how much they can allocate to the shareholder. And companies are still very good allocators of capital. They're growing the dividend, they're buying back shares, and they're creating shareholder value in this period where global uncertainty can lead investors to seek the asset class of putting the money in a mattress. That doesn't work.
That doesn't work. So take that analysis and that focus on cash flows to, of course, big tech, to the Magnificent Seven. A lot lies on their shoulders this earnings season when you think about them powering the rally so far this year. What are you expecting in terms of what you're going to hear when it comes to cash flows there?
The free cash flow margin for that often touted Magnificent Seven is still above average. But where I have greater hesitation is if you look from the end of 2022 through the present, valuations have expanded 50
Yellen
to
says the dollar has been strong and there are divergences with other countries.
More than 60% for the Magnificent Seven. It has not been matched one for one with their profitability measuring on return on equity. That's where I think pockets of the Magnificent Seven could have issues, as we're seeing this morning, and why I think you need to broaden the base of your portfolio, large cap, small cap, value, along with growth stocks, because the rubber band is pretty tight with that Magnificent Seven on a valuation basis.
Well, let's venture outside, of course, the Magnificent Seven then. And where are you finding those pockets of opportunity when you think about maybe where cash flow generation is actually outpacing the growth in valuations?
Well, to borrow from Bloomberg, the Bloomberg spin-off index is up 26% this year. It's rallied quite well since the lows of October 2023. A couple of names that come to mind is Aramark, which is the food service company. They spun off their uniform business. Tonight, where I am in Detroit, is going to be
UK Finance Ministry says Liz Oakes appointed to the Bank of England's Financial Policy Committee. And Yellen says my position has been that currency intervention is acceptable only in very rare and exceptional circumstances.
People still want to travel with their discretionary dollars. Travel and Leisure is the spin-off out of Wyndham Hotels. It's resorts, it's vacation properties. I think that's another good place. They're growing their earnings 9 to 10%. Wyndham is one of the few stocks that's up today. It's up about 5%. It's in our portfolios, leaning to the mid to value side. I think those are all opportunities for the investor as we look forward.
And you actually taught me something. I didn't know that Bloomberg had a spin-off index, so you're going to have to send me the ticker for that one after the show. But can you walk me through why that dynamic exists right now, why spin-offs are doing well? Is there anything to extrapolate out of that?
I do believe so. Over the last 20, 25 years, spin-offs are a terrific formula to create value in small cap stocks. What you typically have is the large company spins off the smaller company. Now they stand on their own. They're no longer cash flowing to the bigger entity, and it unlocks value. The large cap investor maybe sells off the spin, value's created. It's again back on its treadmill. As I said, up 26% year to date. Spin-offs historically are a terrific place to add value in the small cap area, and we know small caps are trading at some of their most attractive valuations to large caps since early 2000, when we saw small caps go on a 5 to 6 year run where they outperformed large caps by 400 to 500 basis points a year. It's been a long time in coming, but I think the iceberg is thawing in that small cap leaning value area.
Well, that is fascinating. Spinoffs, the place to be right now. David, really enjoyed this conversation as always. Our thanks to David Sowerby of Ancora Advisors. And let's take a look at what's moving underneath these markets right now on a very busy earnings day. We're going to do that with Bloomberg's Emily Griffeo. And I mean, we have to start with Meta. What's going on?
Biggest drop since October 2022, Katie, for Meta. And it seems like most of the street is focused on mainly two things: the second quarter revenue forecast, missing estimates, but then also the company saying that they now expect to spend billions more than previously estimated on AI efforts. And we had Mark Zuckerberg saying to investors, be patient, please. You know, it'll take a long time to see results from this, but he said if you're a smart investor, you'll understand that. But I mean, the stock is down over 15%. It doesn't seem like that message is really holding this morning. I thought Mandeep Singh from Bloomberg Intelligence had a good kind of sum up of what's going on. He said their increased cap spending view could be tied to the investments in generative AI, but when you look at the losses in the company's Reality Labs, it suggests that the company's unlikely to see any upward revisions to the free cash flow in the near term. The stock, though, still has 62 buys and only 7 holds and only 3 sells, according to Bloomberg.
So the sell side's still standing behind this stock, but if there's anything we know about markets, it's that they aren't patient. So it'll be fascinating to see how that one develops. But tell me about Caterpillar also having a rough morning.
Yeah, rough morning, down at one point over 8%. They said they expect to see second quarter sales fall, dealer inventories fall. The adjusted EPS for the previous quarter did beat, and then the revenue missed, but only slightly, $15.8 billion versus estimates of $16.12. It seems like the bar was just very high for Caterpillar coming into this. That stock was already up 23% year to date, so the market really does seem to be punishing misses. And then we also know that as a manufacturing company, heavy machinery, they're kind of an economic bellwether. Yeah. They said they see weakness in Europe and in the Asia-Pacific region, ex-China. Not so much in North America, but the other regions around the globe.
So that's the Caterpillar story, and we only have a little bit of time here left, but let's end on a good note. Tell me what's going on with Chipotle.
Record high, above $3,000. They're doing a stock split, hopefully in June, because that is a really large number, but this earnings all around were very good for Chipotle. Comp sales beat, adjusted EPS beat, and then they also lifted their full year outlook as diner traffic seems to be increasing. The demand for chicken is so high that Chipotle actually told employees to not buy any chicken because they have to conserve the supply.
Just insatiable demand for chicken. I don't know where that came from, but Bloomberg's Emily Griffeo, thank you so much. And Chipotle CEO Brian Niccol, he'll be on later on today with Bloomberg Markets to close at 3:30 p.m. Eastern. But don't go anywhere, because coming up, UK futures broker Merrick's going public in the U.S. We go live to the NASDAQ with the company's CEO Ian Lowett next. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Well, UK futures broker Merrick's will begin trading today on the NASDAQ. It will sell about 15.4 million shares for $19. That's going to raise just under $300 million in the IPO. Joining us now for more is Ian Lowett. He is Merrick's CEO. Thrilled to have you with me, Ian. So let's start with the fact that you're a UK futures broker. Your primary listing is now in the United States. Why the United States?
Well, thanks. That's obviously a great question. We're a global company. We service sort of our clients out of 35 offices around the world. And obviously, while we're, very proud to be sort of domiciled in London, which provides us with a series of advantages in terms of time zone, when it came to listing, we were sort of hugely impressed by the sort of depth of sort of knowledge of our space and of sort of market infrastructure companies, of which we are one here in the United States. And, we've had great receptivity, on our roadshow, and we've been able to assemble a, sort of fantastic book of high quality, investors who are all very knowledgeable about our space. And I think that was really what sort of drove our decision.
And so if you think back to 2 years ago, you had tried to sell shares in London. You ultimately didn't go through with those plans. Weak demand was part of that. I mean, what does the demand picture look like in the U.S. versus the UK, especially now versus 2 years ago?
Well, I think the company has really transformed, from where we were, sort of 3 years ago when we did try to list in London. And, the firm is, 4 times bigger than it was then. And, we've just had a much longer sort of track record of growth. We've been able to, grow our profit consecutively now almost, for a decade. And that extra few years, I think, has made, a huge difference in terms of the receptivity, from clients. And, we've just had an absolutely, sort of fantastic reception from investors here. And, the deal was massively sort of oversubscribed. So, we were just extremely pleased with, the decision to list here and the reception that we've had from potential investors.
And I mean, it's really interesting, this trend that's growing. You have UK and European companies coming over to the U.S., switching their listing or just going ahead like you are with the primary listing. I mean, Flutter is about to put it up to a vote.
We're looking now to the Fear and Greed Index, 37 out of 100, which indicates
a
fear, with the Crypto Fear and Greed Index at 72 out of 100, which indicates greed. Keeping an eye on the VIX as well today, it's currently up around 6% at around 17.
Exchanges in the UK, and I'm sure that there are many companies, for whom, listing in the UK will be the right decision. For a global company like Merrick's and, a company in our particular space where what was important was having investors who were familiar with sort of market infrastructure, that was sort of telling. But, I'm sure that, both locations will thrive going forward.
It will certainly be interesting to watch. But you talk about, compared to 2-3 years ago, your company's transformation. If you could take us into some of the details of the changes you've put in place, that would certainly be illuminating.
Sure. So, we've been able to effect some acquisitions which really have made a big difference to our scale and scope. But really, we've been growing, very steadily over a long period of time. There's obviously been some tailwinds over the last couple of years, particularly with interest rates sort of rising, and that certainly helped us. But really, what we've got is a firm that has, a terrific organization. It's sort of capable of taking advantage of the market opportunities we see. And we've been attracting, more and more clients, over a period of time. We've been increasing the amount of business we do with them. And we've been, diversifying, growing the number of products we can offer clients, the number of geographies we can service them from. And, the combination of all of those things, the organic growth, the inorganic growth, has transformed the scale and scope of the company. and we think provided us, with a terrific platform to continue with our growth.
Yellen emphasizes undesirable spillovers from Chinese overcapacity. Also, in just under 10 minutes' time at 10:30 a.m. Eastern, we have EIA natural gas change. Forecast build of 83 BCF on the prior build of 50 BCF.
25% of those proceeds is going to be primary. The remainder is secondary. And of the primary, we continue to see, very substantial opportunities, to continue to consolidate in our space and make acquisitions. So we're, very excited about how, the extra firepower can be deployed, to continue the growth of the company.
All right, Ian, really appreciate your time on what I know is a very busy day. Our thanks, of course, to Ian Lowett. He is the CEO of Merix. And, of course, we'll be talking more about futures trading with Howard Lutnick. He is the chairman and CEO of Cantor Fitzgerald. He joins Bloomberg Television at noon Eastern time. But still ahead on this program, we're going to take a look at the companies making the most social buzz today in our Social Climbers segment up next. This is Bloomberg.
This is Bloomberg.
Valerossi's OPEC output ramping back up by the third quarter or the fourth quarter.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Wednesday. The Fed decides.
Jake Powell pumping the brakes on rate cuts.
Hikes are off the table. No cuts, looking perhaps a little bit more
Yellen says consumer spending in China is incredibly low.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
Our policy rate is likely at its peak.
The threshold to cut rates is a little higher.
We're redefining patience.
Bloomberg Surveillance. The Fed decides. Starting at 1:30 p.m. Eastern. Context changes everything.
All right, it's time now for Social Climbers. A look at the stocks making waves on social media this morning. And first up, Americans are skipping the frozen pizzas and Hot Pockets, and that's resulting in a very tepid earnings report for Nestle. The Swiss food giant out with slower than expected growth in the frozen food category. And it's a sign that U.S. consumers have started to change their shopping habits in response to high prices. Now, next up, though, we have Royal Caribbean Cruises riding the high seas after boosting its full-year profit forecast thanks to high demand. With bookings at an all-time highs, the cruise operator is also able to charge more for trips, so clearly American spending there. And finally, we do have Hertz. It's reporting a loss that was almost 3 times worse than analysts had expected. The car rental company, it's accelerating sales of electric vehicles to reduce its fleet of Tesla models. And that, of course, has weighed on profits this past year. And, of course, you can follow all the latest company buzz on TRE and Go.
In 5 minutes' time at 10:30 a.m. Eastern, we have EIA natural gas change. Forecast build of 83 BCF, prior build of 50 BCF.
Also the thick of economic data. You can see the S&P 500 currently off by more than 1%, 1.2% actually, of course. And you take a look at the NASDAQ 100, your big tech, about the same, down by about 1.2%. Of course, Meta reported earnings yesterday after the bell. Currently, the stock is down double digits, with investors clearly worried about maybe the year of efficiency for one of the year's highest flyers is finally over. And you can see that concern rippling its way through the benchmarks right now. Mark Zuckerberg has asked for patience, and at least today he's not getting it. But meanwhile, you turn to the economic data that we got, and it was pretty interesting. I mean, GDP, it did grow, but less than expected, so slower growth. But you take a look at the price index there, the core PCE price index coming in hotter than expected, 3.7%. That is working its way through the bond market and really adding to those fears that maybe the Fed isn't exactly going to deliver that big bonanza of rate cuts that had been expected just a couple of months ago. We'll continue to talk about that. But coming up, Dow Chemicals reporting a year-over-year drop in sales and operating earnings. We're going to speak to the company's chairman and CEO, Jim Fitterling, next. This is Bloomberg.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B.
Yellen says we would be prepared to use authority to sanction Chinese banks if necessary.
Diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO
1
makes
minute
you a
remaining.
better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Or other authorities.
Could face bigger challenges next.
It was going to keep rain World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Ten seconds.
Well, chemicals makers Dow is forecasting second quarter sales below estimates thanks to weak demand in Europe. Bloomberg's Abigail Doolittle has all the details.
Well, let's take a look at the quarter that was, Katie, and it was a pretty strong quarter.
Build of 92 BCF, build of 92 BCF, that's higher than the forecast build of 83 BCF.
Basically in line. Now, one thing to note about the quarter that was relative to sales, while it was basically in line, it is down on a year-over-year basis, so that could be one reason.
Seeing a little bit of weakness in natural gas.
To what you're talking about with the guidance. However, lots to unpack here, and there's lots of strength. One analyst at Citi saying that they benefited from lower feedstock and energy costs. If we take a look at Dow relative to some of its competitors on the year, we will see that Dow is underperforming a little bit. But one real bright spot here is after the January quarter, which was where this stock diverged from DuPont and LyondellBasell, that you can see that it has basically recovered and closed this gap a lot. And one reason to be positive, even with that sales guidance that you're talking about, if we break down materials and I think it's glossy coatings or coatings, we are going to see that the declines that we've had in growth really on an upswing, still down, but down 5.4%. A year ago, down closer to 25%. And I believe a lot of it depends on strong demand for construction and other end use. So not a bad trend here, especially if it continues in that direction, Katie.
All right, Bloomberg's Abigail Doolittle, thank you so much for that setup. And let's keep the conversation going now with Jim Fitterling. He is the Dow Chairman and CEO joining us now. So Abigail ran us through the quarter that was. And I want to look ahead here because, of course, the chemical companies, when you think about the inventory glut, you guys were some of the first people to feel it, and then it filtered down through a range of industrial companies. Where are we in that cycle when it comes to demand maybe starting to pick back up and what that means for inventories?
Israel intensifies airstrikes on Gaza's Rafah before ground operation.
Back to mid-2022, coming off of a record peak in 21, we started to see a slowdown in the economy, and there was a lot of discussion then around destocking, and 2023 kind of being the bottom of the economic cycle of the chemicals industry. This quarter is the second consecutive quarter we've seen volume growth. We saw 1% volume growth this quarter. If you exclude our hydrocarbons and energy sales, byproduct sales off of our cracker complex, you see 5% downstream demand growth. So that's pretty strong. And with the guidance we gave for second quarter, which is about a $200 million improvement in earnings in second quarter, that will get us to positive year-over-year comps. And so that's to me, is a bit of a sign that we're starting to see the turn happening. We typically, in our industry, tend to lead into a slowdown, and then we also tend to lead out of it when things start to turn.
So maybe that turning point, of course, we're approaching it. Maybe it's already here, but let's situate this conversation in the macroeconomic backdrop. Of course, if you take a look at what markets are pricing in right now the first rate cut has been pushed to December. I remember when people were saying they would start in March. And if that's true, that interest rate cuts are delayed, does that delay a stronger rebound in demand for durables, for construction, from your customers? How are you thinking about that?
Well, we have strong demand growth in several sectors right now before any rate cuts that I think is going to continue through the year. If you take a look at automotive, I think we've seen very strong growth there. Industrial electronics, whether it's through automation or data centers or chip production, a lot of our silicones business, which goes into thermal management, a lot of our infrastructure business in wire and cable, in our P&SP, our packaging, especially plastics business, are seeing strong demand growth. Pharma in our industrial intermediates business is seeing strong demand growth. And then the core of our business, our packaging business, is seeing good volume growth. Our whole polyethylene portfolio was up. Chemical shipments in the first quarter were up almost 4% year over year, 4.3, I think, in the month of March. And so that's a good sign. And on a global basis, up 3.6%. So I think you're starting to see that in the industrial markets, the telecommunications market, consumer electronics, automotive, packaging, we're seeing really resilient signs there. When you get to housing, those affect things like our coatings business for paints, our polyurethanes business for insulation, as well as for furniture and bedding, and durable goods like appliances. Those tend to start to move when you see existing home sales move up or new home sales move up. Permits for new homes are starting to inch up. Existing home sales still relatively flat. But in our experience, once you see a couple of rate cuts, you see a pretty immediate step up in those demand drivers for those businesses. So that's good. You mentioned earlier lower feedstock and energy costs. I would say we saw about a 10 percentage point increase in operating rates in the first quarter. A big portion of that was in Europe. Energy costs were 47 euros a megawatt hour a year ago. They were 27 euros a megawatt hour in the first quarter. We took advantage of that, and with our low-cost positions in Europe, we saw a pretty nice in profitability there.
So a big improvement there in that measure. But let's go global right now. You brought up some of the global influences, but let's talk about global chemical prices. Of course, when it comes to the last 18 months, they've been pretty depressed. You've had some excess supply from China, for example, being brought on. How confident are you that we're maybe past the bottom, or do you think there's more to go?
We saw pricing move up through the first quarter in our ethylene and polyethylene franchises. So that's a positive sign with both price and volume moving in the right direction. We also saw prices move up in our siloxanes and silicones business in the first quarter, and operating rates move up there as well. So two positive trends, and that leaves, again, the construction-related businesses who have yet to move up. So I would say we're seeing that underlying demand strength even in China. We were up in volume in our industrial intermediates business and in our polyethylene
Spot
business.
gold
We were
rises
up
1%.
double digits in the first quarter in China. And so I think that shows you just what a cost advantage we have in the Americas to be able to supply that demand.
Interesting comments around China, of course, from automakers to Apple. There's been a lot of fear about China, but it sounds like you are moving past that. But let's talk about Europe. When you think about Europe's chemicals industry, what does the earnings cycle look like there? We know that chemical companies in the U.S. have been going through it, but what about Europe?
We have a bit of an advantaged position in Europe because we crack light in Europe. We crack more propane in our crackers in the Netherlands and in Spain. And so propane to naphtha spread has increased pretty dramatically. And that's a cost advantage that we have that others in the market don't have. We're focused on the domestic market. And so the thing we want to watch long term in Europe is, can these energy costs stay low like they are today? And what happens to the downstream demand? We've seen some announcements of higher cost assets in Europe shutting down. We've seen some announcements on energy-intensive industries like steel shutting down. We have to watch the demand and see what happens with our downstream customers in places like appliances, in automotive, and make sure that our footprint is sized to serve that market long term. Clearly, the cost advantage is in Canada, the United States, Latin America, and the Middle East, with Europe having moved into the high-cost position last year, and Asia-Pacific kind of at the top end of the curve. And what sets the pricing for them is the price of oil.
And, I mean, speaking of cost advantages, you take a look at your U.S. gas cost advantage. This is from, of course, Bloomberg Intelligence. That advantage versus your global competitors, it appears to be heading back towards record levels. How much of a tailwind was that to your first quarter earnings?
You had over $100 million of improvement in the first quarter just from lower feedstock and energy costs around the globe. The European numbers I quoted you from on an electricity standpoint, as well as the U.S. natural gas advantage.
All right, Jim, really appreciate that. Of course, is Jim Fitterling of Dow. He is the chairman and CEO. And for more insight on the C-suite, be sure to tune in Monday when we'll be joined by the Lamborghini CEO. That, of course, is coming 10:30 a.m. Eastern on Monday. But before we get there and to the weekend, let's get a check on these markets with Abigail Doolittle.
Well, I feel like there's one stock that really is the check on the markets today, Katie, and that, of course, is Meta. Take a look at the shares absolutely plunging, although off of the lows, down 12% right now. Really quite a stunning cliff dive. I believe it's still the worst day since October of 2022. And this, of course, on the fact that the growth for the current quarter not quite as strong as the growth for the past quarter, which was a great quarter, and the overspend or the big spend, CapEx, on AI. Investors not liking that. Perhaps maybe a little bit of a reminder after the year of efficiency that the year before was the year of the metaverse, and that didn't go so well from a spending standpoint, although it seems like AI is different. As for some of the other markets, let's check in on the S&P 500 and see where it is at this point. And I believe that the S&P 500 is down 1.3%. We have Microsoft and Alphabet ahead tonight for earnings. Meta not setting a good stage for them. On the other hand, Tesla, the outlook for Tesla is good. So it's going to be interesting to see how these two companies come in. Microsoft, a big deal will be the Azure, the cloud unit. Will they achieve the 28% growth that many are expecting? For Alphabet, their revenue is expected to decline for the first quarter by 5%. What does that mean? The traditional search business and, of course, AI. And what makes all of this so interesting, Katie, we have this two-year yield almost at a 5%. So despite the fact that we have stocks down, there's not haven fear. On the other hand, you could say that the two-year yield up 7 bips. That's another weight on investors, as perhaps we're starting to think ahead to the Fed next week. I don't think that anybody thinks the Fed's going to raise next week, but nonetheless, some color. Now, when we put all of this together for the S&P 500, let's take a look at the chart that we looked at yesterday. Sometimes it's very helpful to do this, and just as a refresher, this is the beautiful uptrend out of the October lows. Nonetheless, if you were to put this in a longer chart, you would see that it's not quite parabolic, but pretty steep. Now we're starting to see over the last 3 weeks this decline down. It appeared as though there were some dip buyers, but they got pushed back down by resistance, a 50-day moving average. It is now very likely we go to the bottom of this range. More earnings. Again, the Fed next week. It's not really clear what that will be. It could just be this bear sentiment. Once a trend takes hold and this near-term trend is shifting, we could see the S&P 500 go all the way down to its 200-day average near the 4,700, 4,600, and that, in fact, is close to where the Russell 2000 is. And then finally, Katie, another reason why we don't have the S&P 500 breaking out of that range. There have been some companies that have beaten, but the reward the day after a beat is paltry, almost 0.2%. Compare that to quarters that have been before, closer to 1%. Well, when you put that together with some of the negative tech earnings that we're having, well, that's why we have this S&P 500 in a near-term downtrend.
Yeah, it definitely explains a lot there. Bloomberg's Abigail Doolittle, thank you so much. Now, coming up, we'll hear from Peter Boris. He is Computer Trading Chairman and CEO, about the pressures facing big tech. This is Bloomberg.
On season 2 of The Circuit, we're walking with the titans of banking.
Hello! You guys love these meet and greet things.
Me too! And driving a warship through the Pacific.
You're not the typical Silicon Valley founder wearing a black turtleneck. Like, how does that play?
I am a little bit of a caricature.
Taking you around the world.
So we're kind of in the middle of nowhere. It's incredible that this is the site of the biggest Netflix production ever in Latin America.
And getting you closer to tech and business leaders like never before.
You have our money, you've got world leaders on speed dial. That's a lot of power.
Sometimes I think I'm just riding the Bronco and hanging out for dear life.
You driving a Hummer is pretty badass. That's what I'm going for, like badass soccer mom.
I'm Emily Chang, your ticket to the front lines of tech, innovation, culture, and host of The Circuit. Wednesdays on Bloomberg Originals and Bloomberg TV.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close. Welcome to Balance of Power.
This is Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
It's time now for our Wall Street Week daily conversation. And today, we're focused on inflation after yet another hot print today. Peter Boris, he is Computer Trading Chairman and CEO. He spoke with Wall Street Week host David Weston earlier about what commodities can tell us about inflation trends.
The 7 C's are relatively consistent that inflation is going to be persistent for longer. You're starting to see some of the seasonal commodities potentially break out. Cattle, 1C. Corn, the other C, that have been relatively weak. The stronger C's, coffee, cocoa, and crude, they've been relatively stable after having fairly large moves.
And what's driving that right now? I mean, what are the forces? Why do you look at the 7 C's?
I look at them as the AC, which is the consumer. And in terms of, is the consumer going to have to substitute their spending for more on staples where demand is inelastic, and that then is going to lead to less discretionary spending across the board. And so then I look at bigger picture stocks like Visa, MasterCard, Costco, Target, to see if the consumer strength is still there. Those stocks have demonstrated a little bit of weakness, so that is the conundrum, the 9th C, of the pressure on commodities and potential weakness of these consumer stocks, which definitely puts the Fed in a box.
So if there's a breakout in some of the C's and the commodities, that puts pressure on Visa and MasterCard because people don't have as much money to spend at Target, for example. They have to spend it on food.
Yes, yes. And so those stocks in particular are a good measure of consumer strength, and you see that in weekly data that you can get from JP or Bank of America, compares it week over week or year over year as the strength of consumer spending.
Now, some stocks that have really felt a lot of pressure just recently have been the big tech. What is going on with them, do you think?
Well, first of all, there's the trading aspect to it. So, you know, there's the old saying, right? What goes up must come down. So you've basically had a really big move. You've corrected. Technically, a number of these stocks have broken key levels. And if they don't reject those levels and start their uptrend again, that could mean that the leading aspect of the technology relative to other stocks is ending, which can hurt the large cap indices because they're such big weights.
What does this all say to the Fed? I mean, I could speculate that actually a little bit of tightening financial conditions would not be a bad thing for the Fed right now because they've been going the other way.
I think the Fed is sprinting.
Putin says I plan to visit China in May.
Very challenging because you have this tug of war. But it's hard to say that you should be easing when you've just had record highs in Bitcoin, record highs in equities, and you've seen gasoline prices go up, and potentially now these other commodities breaking out. So they're stuck, in my mind, of not doing anything probably the rest of the year.
Gold doesn't begin with the C, last time I recalled. But you talk about record highs. We've had some record highs in gold. Is that a useful indicator in your experience over time of where inflation might be heading? Because often you think that's where you go if you think you got inflation.
So
at 11 a.m. Eastern Time, we get the Kansas City Fed Composite Index forecast -5 on the prior -7, and the Kansas City Fed Manufacturing prior -9.
So you would think, oh, that's a cross current. People tend to look backwards. So in the 70s, when gold was really strong and inflation was high, there weren't really a lot of other instruments to use to hedge against inflation. But today, there are many more instruments. You can short bonds in the futures markets. You can participate in individual commodity markets, or you can actually participate through options or futures in the equity market. So I don't think gold is as much of an inflation indicator as perhaps a supply and demand question for uncertainty in the global geopolitical, and then non-U.S. central banks may have added to gold demand recently. Of course, that too, in the last week or so, has had a pretty significant correction.
Let me come back to your ninth C, I think it is, conundrum, what you said.
Yes.
Okay, as an investor, how do you invest into a conundrum? What do you do?
So it depends on your time frame, right? If you're younger and you have a long time frame, then you sit back, and that's the nature of markets. On average, right, there's a double-digit decline in the S&P every year. Of course, I'm always mindful of the 6-foot-tall man that drowns in water an average height of 5 feet. So you have to be careful of averages because there are bear markets. But in that case, you stay the course. If you're more like me and you're a trader and you've had a good run, I think the hardest thing in portfolio management and discipline is selling a winner or taking it down and rebalancing your portfolio. Is this a time to rebalance your portfolio where you have this conundrum combined with Fed uncertainty? I think that makes a lot of sense.
Fed uncertainty, but do you see a reasonable prospect right now of the Fed cutting, given where the economy is right now? I mean, let me put it a different way. Why cut? What's the impetus for it?
As I mentioned, I don't see the Fed cutting at all this year. I've been a little bit of an outlier on that, and now I think it's become just a drop more of consensus. I don't think they are going to raise either. There isn't a necessity to raise because you still have a lot of geopolitical uncertainty, which can slow the economy. And if they end up cutting, in my mind, that's because the economy has weakened, because either of the S&P has gone down back negative and maybe down 5-7% on the year, or there's more geopolitical uncertainty.
And that was Peter Borish of Computer Trading and Wall Street Week host David Weston. And tomorrow, we'll hear from Clive Gillison, Carnegie Hall Executive and Artistic Director, about the business of fine arts institutions. This is Bloomberg.
it meant that you always look different because you were the first woman, you're the first brown person, the first Asian, the first Indian, the first person of color to lead a global luxury brand. You're always the first. You're always underestimated. People don't know exactly what to
At
expect.
11 a.m. Eastern Time, we get Kansas City Fed Composite Index forecast -5 on the prior -7, and Kansas City Fed Manufacturing prior -9.
Let's take a look at some stocks hitting highs and lows today, and we start with Chipotle, hitting a 52-week high after lifting its full-year outlook thanks, in part, to its chicken promotions. Shares of the restaurant chain in the midst of a 6-month rally that's seen the stock surge close to 70%, up another 2.6% today. Meanwhile, on the other side, you had Synchrony Financial. It did hit a 2-year high that was after it reported first-quarter revenue that blew past analyst expectations, but currently down about 2%. Now, on the other side, Boeing hitting a 52-week low after rating agency S&P revised its outlook to negative. The troubled airline saw a tumultuous quarter. Headline is 737 MAX prices down about 5% over the past 2 days. Now, coming up next, we have Bloomberg Technology, and that does it for Bloomberg Markets. I'm Katie Greifeld, and this is Bloomberg.
Do you feel like this age of abundance over the last few years of just how much was being made?
For my personal taste, I am thrilled at what I get to find every night if I have time to look for something. So I personally don't think too much was made. I think the customer will tell us when there's too much made and they won't watch things. And I think part of the misalignment I talked about before is imagine if things didn't get picked up or movies didn't get made that people didn't watch or go to see. That's how it used to be. The customer decided. I do think there's going to be less made in the middle price range. I think there's going to be more made in the higher price range because when you get to global events like Barbie or Oppenheimer or Super Mario Brothers, it's worth the investment, and it's clear that the audience is there, and they just need to be given what they want. The middle, which ends up, quickly on one of the services in a way that we're watching movies that we don't know how they got made or when they got made and all of that. I think that will probably be curated better.
Kansas City
and I
Fed
hope
Composite
there's
and Manufacturing Index. I'll lead with the Composite
inexpensive
Index.
things that give more people the chance to express themselves and have their work seen.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. From the heart of where where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
-8, -8, lower than forecast, -5. Still waiting for the manufacturing.
I'm Ed Ludlow in San Francisco. Caroline
So the US to sell $70 billion in 6-month bills on April 29th to settle on May the 2nd, and to sell $70 billion in 3-month bills on April 29th to settle on May 2nd.
And from earnings to IPOs, we speak to the CEO of ServiceNow on their quarterly numbers and Rubrik's chief on listing day. And $14 billion goes to Micron from the CHIPS Act to boost America's memory chip prowess. But first, there is only one story that matters right now, and it is Meta. You see the share reaction to Zuckerberg outlining billions and billions of dollars are going to go into building out AI infrastructure. They're in investment mode. Expenses range raised, CapEx raised. But the focus of the call was on the product cycle. How many years is it going to take for this investment in AI at Meta to materialize in sales growth? That's the question. The stock on track for its biggest drop since October of 2022. And given Meta's scale, remember how well it's performed year to date. It was up more than 40% pre-earnings. Look at the market cap. Look at the scale of this company, but also the market cap lost in this morning's session alone. Let's get team coverage. The reporting from Bloomberg's Kurt Wagner and the analysis from Bloomberg intelligence analyst Mandeep Singh. Kurt, I'm going to start with you. Mark Zuckerberg was combative on this call, but what he tried to do was say, trust me.
And Kansas City Fed manufacturing -13, -13.
To have an impact on the existing business. Explain what we learned.
Yeah, that's exactly right. He was basically saying, look, this is going to be a multi-year investment. This is not the kind of thing that's going to return, to shareholders very quickly, but be patient, right? He said smart investors will see the benefits of this long-term plan, right? Sort of suggesting that, hey, anyone who's savvy, anyone that sees the future like I do, they're going to be in this stock, even though it's taken a little bit of a short-term hit. And so, it was a little bit, as you say, combative. It was one of those things that we don't necessarily always hear from him, which is sort of, pleading investors, hey, be patient, hang tight. We're gonna get there eventually, but you got to weather a little bit of turbulence in the meantime.
Mandeep, when you look at the fundamentals of this company, you and I were discussing before the earnings print, where do we look to see if there is already evidence that AI is impacting the top or bottom line? I looked at the impressions growth. I looked at the pricing growth of ads, because this is an advertising-based business. What did you see in those numbers?
Yeah, I mean, the impressions growth continues to be very impressive, 20%, and that's driven by better feed recommendations. Ad targeting is better. And ad pricing, it was much better in the Europe region if you parse through the numbers. North America, it was lighter. Part of that could be explained from the pullback, that everyone is expecting from Chinese advertisers like Temu and Shein, but they didn't call that out. So clearly that's a risk, and that's why that guidance, that top-line guide was wide when you look for 2Q. But look, at the end of the day, when you look at the cost growth, the cost of revenue growth, that will be in double digits. So if that mid to high teens revenue doesn't pan out for some reason, and look, advertising is cyclical, that's when you will see margin compression. I mean, so far, the story has been cost control and revenue growth accelerating. Now that story could change because the cost will grow double digit, and if the revenue growth doesn't match, that's when there is a risk.
We're showing you the markets right now. Meta is down 12%, but on a points basis, clearly it's dragging down the NASDAQ 100 and S&P 500. The Philadelphia Semiconductor Index, or SOX, I put that on there because there was knee-jerk reaction, in particular NVIDIA last night, that fell. It is now up 3%, and I think the logic is Zuckerberg said 350,000 H100 GPUs will come online this year as Meta trains its AI model. Kurt, the other area of interest is Zuckerberg's kind of fired up about things that surprised me. Glasses. He spent a lot of time talking about glasses, but there is still lots of confusion. Well, okay, wait. Is the metaverse still a strategy? Also, the year of efficiency, is that still a thing? Just try and clear up the muddy waters for us on what Zuckerberg's trying to do.
Yeah, I mean, there's so many things that they're working on at one time. It's understandable that someone might be a little bit confused, but he did bring up the glasses a lot, and what he basically said was, these are progressing much faster than I anticipated, right? So the glasses, for those who aren't familiar, this is the idea of wearing a pair of specs that look like maybe reading glasses or sunglasses, but that have all kinds of AI or AR features packed into them. They're working with Ray-Ban to produce these right now, and I think what Mark Zuckerberg was saying was that these have gotten so good so fast that it's encouraged me to continue to invest in AI, to continue to put money into Reality Labs.
At 11:15 a.m. Eastern Time, we expect comments from ECB's Nagel, who speaks about climate change.
The glasses would sort of be the next iteration of a phone. You would wear it on your face. But now he's saying he thinks they're getting there faster than he anticipated, which is why we're seeing this increase in spend.
Okay, gentlemen, bear with me. We've actually had a sort of breaking news headline since we've come on the air, and it relates to TikTok. ByteDance has published on its Chinese website a statement basically saying it has no plan to sell TikTok. ByteDance has no plan to sell TikTok. I think we need to dig a bit deeper in the coming days to understand what they specifically mean by that. Mandeep, you've also published research, your latest thinking on TikTok just this morning on the Bloomberg terminal. Just explain the basics of it to us, please.
Yeah, I mean, look at TikTok has a lot of original content that goes to, Snap, that goes through Instagram, YouTube. And so if TikTok is banned, a lot of those creators have to go to some other platform. Now, whether it's going to be YouTube Shorts or Instagram Reels, we don't know. But you can see that a lot of the original content creation happens on TikTok. And that's where I think you will see Meta being a beneficiary. But I'm excited to look at, the YouTube numbers tonight, because to me, YouTube should be the 15% consensus numbers handedly, given the kind of, viewership gains that you have already seen with YouTube. And so I think that's the one aspect that people need to think about is the creators aren't going to wait for 9 months to move. They're already going to start thinking about what's the alternative platform where they can move their followers. And I think that's going to determine gains for Snap, YouTube, and Meta in the coming months.
I think it's important we note that on the earnings call for Meta, an analyst asked Mark Zuckerberg for reaction to TikTok. Susan Lee, the CFO, jumped in and said that they're monitoring that situation closely, but it was too early to tell the impact of a TikTok divest or ban on Meta's business. We're going to dig much deeper into Meta throughout the hour, but big thanks to Bloomberg's Kurt Wagner of Bloomberg News and Mandeep Singh of Bloomberg Intelligence. Coming up on the program, ServiceNow's sales forecast falls short of Wall Street expectations, but there is some positive outlook. It's AI related. We're going to speak to the CEO, Bill McDermott. There is a lot happening at once in the markets as well. Microsoft and Google, or Alphabet, the parent of Google, report after the bell. Those are pretty significant declines. And the idea here is that we're worried on the back of Meta's earnings. We're worried that all of this spend on AI infrastructure is not bringing some big boom in generative AI-driven sales growth, actual software products that people use and those companies make money from. It's going to be such an interesting afternoon. This is Bloomberg Technology.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet.
At 11:15 a.m. Eastern Time, we expect comments from ECB's Nagel, who speaks about climate change.
It's been good for us.
ServiceNow out with first quarter results, but it's the outlook where the focus is. Projecting subscription sales will increase about 22% to $2.5 billion in the current period. That was a little bit below what the street was expecting. But those are street expectations. What about the big expectations of the company's CEO? Bill McDermott, CEO of ServiceNow, joins us now. Bill, good morning to you. Let's cover off the classic earnings stuff. You have a strong quarter, and then you give an outlook which, relative to consensus estimates, was a bit disappointing. What would your pushback to that market reaction be?
Well, first, I think you have to look at the triple play that we just pulled off. Ed, we had a beat on the top line, a beat on the bottom line, and we raised the full year guidance. So if the high-class problem we're solving for is we didn't raise the guidance enough, everyone can really relax, because over the last 5 years that I've been here, we always beat, and we have every expectation of doing so again.
Bill, I actually want to invite you to give the basics of what ServiceNow does. I think that a big portion of the audience know the name. They might appreciate just an explanation of what it is you're out there in the world doing. And my summary basically is you're trying to capture IT spend, you know, the budget for IT spend from all kinds of companies.
Yeah, I think the best way to sum it up is think of ServiceNow as the AI platform for business transformation. If you look at companies today, they need a platform on an end-to-end basis, from IT to the employee experience to the way they run their customer relationships and the way they build new products. They need one platform that can do all of that. And what's unique about ours, we built it organically, there's no tech debt in it, and it's pristine. It's a sheet of glass that lies above the mess that's been created for the last half century. And the big movement today is now, what is the new frontier? The new frontier is Gen AI. And people say Gen AI, what does that mean? It means the companies and the CEOs that are watching this program need to optimize their processes. Every business workflow in every enterprise will be engineered with Gen AI. We are the first mover and the market leader in that category in the enterprise. So the future glide path could not be brighter.
Bill, the stock is down almost 6%. I note that there is some pressure in the market this morning because of Meta's earnings, and we'll get to that in a bit. But let's talk about RPO, because I think that gives some evidence of the backlog. RPO,
shortly expecting comments from ECB's Nagel.
Performance obligations. That's basically SaaS speak for backlog. You got a backlog. Why should the investor base be more positive about that backlog?
Well, they should feel really good that we have nearly $18 billion in remaining performance obligations. So that is business we have in the backlog that is yet to be fully recognized. So the backlog is there. We're beating on the revenue. Just think about this. We beat on the revenue by 100 basis points. We beat on the margin by 150 basis points. Our free cash flow was up 47%, and our gross profit was up 83%. And we're talking about, was the increase in the guide enough? And you just mentioned it, Ed, perfectly. There's $18 billion in backlog. So the company is really on a tear. And one of the reasons it's on a tear is you have great companies like Microsoft and IBM, as an example, that are transforming their employee experience with a digital-first support model.
Fed bids for 4-week bills total $226.1 million.
Novartis is delivering new drugs and increasing operational efficiency by streamlining clinical trials, research, and financial management with our Gen AI, and there's countless other examples. So Gen AI right now is a small part of the overall total. You know, we're a $10 billion run rate cloud company, but the uptick in future sales in generative AI when companies re-engineer the way they run on our platform is unbelievable, because there'll be $500 billion spent on it in 2027 alone. So this is a really big market. We're the leader, and we're teaming up with the best in the business like NVIDIA, Microsoft, IBM, and others to create a bright future.
You know, again, Bill, the stock is down 6%, and there are reasons why for that in the short term. One of them is probably Meta. I know that you're the CEO of ServiceNow, but to extrapolate from Meta, part of the concern last night was all this investment is going into the underlying infrastructure that supports generative AI. But Meta is a case study. They're not yet seeing that investment in the infrastructure translate to top-line growth in the form of software, right? Tangible evidence that they're selling AI as a product, as a platform. In your case, you are only selling it as a software layer. Just explain that thesis. Like, should we be as concerned that corporate America has not yet worked out how to sell AI?
Absolutely. So let's differentiate. First of all, Meta's a great company. They had very good results, and their guide might have been a little muted in terms of the return on Gen AI. They're running large language models, and that's very important for the future of the world, and they're doing a great job. We're running small language models, which basically means we run our platform with the customer's data in mind. So it's rocket fast, zero latency. Because we're using the customer's own data, there is total accuracy, and it is very inexpensive. And that's why customers are buying our Gen AI now, because it's secure, it's inexpensive to run, and it's 100% accurate based on the customer's data. So that is what they're buying right now. We also have an open platform where we integrate with Meta, and we integrate with Google and Microsoft and all the other market-leading companies out there should the customer want to reach into large language models. And we've teamed up with NVIDIA, where NVIDIA, probably our greatest partner in this category, is running small language models for us and large language models with their compute power. Let me give you an example, Ed. Let's think about employees and customers. Think about Gen AI deflecting all the soul-crushing work that people don't want to do anymore. So think of employee and customer deflection, where virtual agents can actually do the work that people used to have to do. Think about software engineers increasing their productivity or their speed of innovation by nearly 50% by texting something in natural language and turning that into software code.
Yes.
And there's several other examples. But the point is, small language models are selling today. We're making a lot of money at it. And large language models are also available on our platform, but our customers are really teaming up with Microsoft, for example, on Copilot, and ServiceNow on our Virtual Assist AI platform. And we got a together is better solution for the marketplace, and that's what's selling today.
Bill, I appreciate the depth of the answer. Bill McDermott, CEO of ServiceNow, thank you so much. Coming up, Microsoft-backed Rubrik goes public amid a rise in demand for data security. We do speak to the CEO, Bipul Sinha, next. This is Bloomberg Technology.
At 11:30 a.m. Eastern Time, US sells $70 billion in 4-week bills, prior bid cover of 2.9 and prior high yield of 5.28%.
This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
DOJ or other authorities
Could face bigger challenges next.
that was going to keep rain World Cup.
This is a three.
As the economic picture covering the intersections of Hollywood, Silicon Valley, and beyond. Rubrik, which focuses on data management recovery from ransomware attacks and accelerates cloud mobility, is officially going public. And joining us now is Rubrik's CEO, Bipul Sinha. Bipul, the shares are indicated to open at $38 a share. You priced this IPO at $32. Just tell me what that means to you today.
Thank you, Ed, for this opportunity to speak with you. It's a very exciting day for Rubrik employees, our customers, our partners, and everybody in our ecosystem around the world. Look, I will leave the stock price to the experts and the traders. Ultimately, we are a different kind of cybersecurity company, and we are helping our customers continue to run their business, even in presence of cyber attacks and breaches, so that hospitals are open, kids are going to school. When people swipe credit card, they get money out, irrespective of whether there's a successful cyber attack or not.
Bipul, did you really need to go public for the visibility? Like, your business seems to be doing quite well. Do you think this actually tangibly improves your sales?
Look, we are working with a number of customers around the world, having more visibility, having more brand name recognition, and more importantly, when you are as a public company, everybody can see your numbers and they understand the resilience of the business. That's actually good for our customers. That's actually good for our ecosystem. And it also helps us be in front of more innovative companies, talk to them about our story, and essentially help them against the ransomware attack and other cyber attack to deliver cyber recovery and cyber resilience.
Bipul, I spent 2 years asking you if you'd go public. You finally and eventually are doing it. But I think there's a feeling that there's a hell of a premium on this IPO. A lot of people want to see evidence of revenue and profit that comes from this. But you resisted the temptation to talk endlessly about AI. Are you saying you don't have a core AI story?
We do have a core AI story. Rubrik has been building AI for the last 10 years. In fact, our data threat engine is built on AI platform that delivers security intelligence directly from the data. And more recently, we announced a product, Ruby, which is a generative AI-based AI data defense and recovery that helps cyber defender fight fire with fire, because attackers are applying AI in terms of how they are increasing the volume, variability, and velocity of attacks. We are allowing the defenders use AI in terms of Rubrik and Ruby so that they can deliver cyber resilience and cyber recovery.
People, very quickly, Microsoft remains an important financial and technology partner to you. How will that relationship work now going forward?
We have a very strong relationship with Microsoft. In fact, we were Microsoft Partner of the Year in 2023, both for US and UK. We continue to co-innovate together, continue to help our joint customers get cyber resilience, make sure that they can withstand cyber attacks and continue to run their business, because after all, digital trust.
At 11:30 a.m. Eastern Time, the US sells $70 billion in 4-week bills, prior bid cover of 2.9 and a prior high yield of 5.28%.
2 years of asking if you go public, you did. Thank you. We need to talk about the markets here. Let's look at the index level and the majors. There are several stories. Meta's earnings results and the reaction in Meta stock clearly is a factor, particularly on the NASDAQ 100. But we got a GDP print for the United States, economic data that was the opposite of what equities markets wanted to see. And that is that the economy is slowing down. That is a big theme, particularly for technology shares in the market today. Look at the NASDAQ 100 down 1.6%, the S&P 500 and the broader NASDAQ also down in similar territory. And the market is basically saying, okay, well, let's rethink some things here, now betting that the first Fed rate cut comes in December. We continue to talk about that. This is Bloomberg Technology.
The biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? Is it just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention.
Shortly expecting the results of the 4-week bill auction, I'll lead with the high yield.
It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching the China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Okay, welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco, and I think we need to go back to the markets. There is a lot happening and a lot of red on the screen behind me. Look, the story is multifaceted. Meta's earnings and a 12% drop in Meta stock is clearly having an impact at the index level. But economic data is also hitting technology shares. We got a GDP reading for the United States that came in much softer than expected. And the rationale that I'm seeing in Bloomberg's markets coverage is the equities market in particular did not want to see that. We're also recalibrating when we think the Federal Reserve, America's central bank, is going to cut interest rates or move on interest rates in some way for the first time. We're moving from the summer to now thinking December is when that will happen. All of that impacts the technology sector. And you see behind me there's 1 point of outperformance. Semiconductors, the SOX or Philadelphia Semiconductor Index. Really curiously, it's Nvidia that's driving us higher. Last night when Meta had its statement on its capex for AI investments, Nvidia fell. But in the actual session today, it's rising. And I guess the idea is, well, if Meta's going to spend money on AI, it's going to be in Nvidia where they're spending it. So that's where our minds are at right now with the markets. We ought to keep checking in on it. It's kind of a wild day where news flow and economics are combining, and we kind of love that. Let's talk about TikTok. The clock is ticking for TikTok to avoid its ban in the US should it be unable to divest. Joining us now from DC is Bloomberg's Mike Shepard, and Mike basically leads our coverage of the intersection of politics and tech. We had that breaking news headline at the top of the hour, Mike, that ByteDance saying through its Chinese website that it has no plan to divest or no plan to sell TikTok. That was the wording or translation. I don't really feel like I understand what they mean by that. They're digging in, basically.
They are digging in, Ed, and the statement in a way is not that much of a surprise. They've made clear through this process as the legislation started to take shape last month that really started to look real, look like
5.275%, 5.275%, bid to cover ratio 3.14, 3.14. So the US sells $70 billion in 4-week bills and awards 26.27% of bids at high.
And resist what they see as, and the Chinese government also sees as, interference in a valuable media property.
So there's a lot that's happening quite quickly. We'd reported that ByteDance was thinking about a solution where it sold TikTok, but without its sacred algorithm. And on the show yesterday, we talked about why that algorithm is so important for content creators in particular. The president signed this law, signed this into law yesterday. But as far as I'm aware, the president hasn't actually commented or specifically talked about his view on TikTok. Just update us on the politics, I guess, of the last 24 hours.
This is a great question, Ed, because, politics has really surrounded this, not only the geopolitics between the U.S. and China, but even the domestic politics. And when it surfaced back in March, President Joe Biden said he would sign it. He would sign the measure. But he hasn't really expounded much more on it. Now, to be clear, the TikTok bill was attached to a much larger foreign aid package, which was a far greater priority for the president and his administration. They wanted to see aid to Ukraine get through above anything else. And in his remarks yesterday, he really devoted the lion's share of his commentary to that. At the same time, his spokesperson made clear yesterday, after the president spoke, that selling TikTok, a full divestiture, was something that they wanted. At the same time, they do not want to see the app shut down. They respect that many U.S. users derive great enjoyment from it. And also, for many, it is also a source of business. And that is something that the administration does not want to see shut down.
Bloomberg's Mike Shepard out of DC. Really appreciate the coverage, and I think we're going to be talking about this quite a lot for at least 270 days. Thank you. I'm going to keep the conversation going and get some of kind of the market analysis. Jasmine Enberg is principal analyst at Insider Intelligence. We're wading through a lot of unknowns, but where is your head at, Jasmine? You look at TikTok from the point of view, well, this is a platform that almost 50% of Americans are using. What do you think will happen?
Well, I think the announcement from ByteDance today that they weren't going to sell was to be expected. I mean, TikTok has already said it's going to wage an intense legal battle. I think the question for me is what happens now with all of this uncertainty. I mean, TikTok obviously has a lot of loyal users. Many of them have already come out in full force to defend the app, and I expect they'll do so again. I don't expect many of them to leave, and advertisers aren't going to leave as long as there's audiences to reach. And content creators, of course, which are a really important part of the app, aren't going to leave if there is money to be made. But if there's one thing that advertisers don't like, it's uncertainty. And if this uncertainty surrounding the legal battle and what happens to TikToks sends enough of them running for higher ground, that could eventually lead to creators starting to leave, and users will follow creators wherever they go. And that could end up in an undoing of TikTok even before this matter is resolved in courts, or if it finds a buyer, ByteDance changes its mind.
So Jasmine, coming into the show today, before the headline crossed about ByteDance having no plan to sell TikTok, what was your thesis before that moment on TikTok?
My thesis in terms of whether it was going to be sold or not, I mean, what I was thinking about mostly was in terms of the algorithm and how important a part of that would be in terms of whatever sale could potentially take place. I mean, the algorithm is a big part of what makes TikTok tick, and not having it as part of the sale would, of course, lessen the valuation, potentially expand the potential list of buyers, but it still wouldn't be an easy task to find a buyer for TikTok, even if ByteDance were willing to sell the app.
Okay, so last night during Meta's earnings call, an analyst asked Mark Zuckerberg for basically reaction to the TikTok situation. Susan Lee, who's the CFO, jumped in and answered the question and said, you know, we're monitoring it, looking at it closely, too early to tell what it means for our business. Do you have a clear winner in any scenario of who the main beneficiary of a TikTok divest or a TikTok ban might be in the social media landscape?
Yeah, well, Meta has been pretty silent on this issue, and for good reason. I mean, there could be ramifications in other countries where Meta does business. Meta would be a clear winner if TikTok were to disappear from the US, mainly because of Instagram Reels. It is one of the most natural fits for displaced TikTok users. It's not exactly the same as TikTok, but I imagine that a large number of TikTok users would move there or to YouTube Shorts. And it would also be a winner in terms of ad dollars. Now, Meta is a massive player in the digital ad landscape. We're expecting it to bring in about $64 billion in US ad revenues this year. TikTok's ad business is smaller, by no means small. It's about $10 billion ad dollars, $10 billion in ad revenues. And so, of course, some of those dollars, a big chunk of those dollars would likely go to Meta as well.
Jasmine, will Meta be the world's leading AI company?
It's a great question, and Meta certainly is in the AI race to win it. I do think it could be a dark horse in the race to AI. If you think about the distribution potential alone, it has a built-in audience through Facebook, through Instagram, through WhatsApp. I was doing some calculations after it released Meta AI into the search bars and Facebook feed just last week, and Meta only needs 43% of US Facebook users to use Meta AI on a monthly basis for its audience to be as big as ChatGPT is here in the US. And that isn't unthinkable if you consider how prominently and permanently Meta AI is displayed across the apps. And then in terms of monetization, you know, that is going to be a big factor in determining who wins the AI race, and Meta has a competitive advantage there. We don't really know how Gen AI is going to be monetized, but like pretty much everything Meta does, it's likely to be an ad play, and this would be connected to its powerful ad ecosystem. And so I could see it emerging as an unexpected winner, though, of course, there is a lot of competition and a crowded market still to face.
Meta shares off session lows, but we're still down more than 12%. Jasmine Enberg of Insider Intelligence, it's always great to have you on the program. Thank you. I just broke this story with Bloomberg's Kurt Wagner. We just published it on the Bloomberg terminal. Elon Musk is going to be deposed on Monday as part of the first arbitration hearings in the legal process where former Twitter employees have basically brought a class action against Elon Musk. The former Twitter employees say they were cheated out of severance pay when Musk bought the social media company in October of 2022. Law firm Lichten and Liss Riordan will be representing almost 2,000 former Twitter staff in individual arbitrations, as well as more than a dozen class action lawsuits overall in the courts. That story just out on Bloomberg. I'm sure it will be online soon as well. Stay with us. We have so much more ahead on the program. This is Bloomberg Technology.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife and I. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
Wow.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Okay, it's time for Talking Tech. And first up in the news, Abu Dhabi startup G42 is choosing sides. The company, known for a sprawling product portfolio in AI, is teaming up with American companies like Amazon, OpenAI and Microsoft, and divesting from its Chinese partners. The move comes amid worries from US officials of open backdoors from the Chinese government, with some members considering an intelligence briefing to discuss G42's latest partnership with Microsoft. That is the Bloomberg reporting. Plus, Chinese online tutoring platform Zhongbang has filed confidentially for a US IPO. That's according to sources. The filing adds to signs that Beijing's looking to boost funds for its tech industry. The company is said to be working with advisors on the potential listing that could take place as early as this year. And semiconductor maker SK Hynix says it expects a full recovery in the memory chip market led by AI-related demand. The company posting first quarter results that exceeded expectations, forecasting its fastest pace of revenue growth since 2010. SK Hynix says it's entering a rebound phase and is preparing to expand capacity for its leading-edge chips. Okay, let's stick with chips, let's stick with memory. Micron is expected to receive nearly $14 billion in US grants and loans to help the company build new American fabs or factories. We're also expecting Intel results after the bell. There is a lot happening in real time with the semiconductor industry. Joining us to discuss it, Bloomberg's Ian King, who leads our coverage of semis. Let's start with Micron. They are the number 3 maker of memory chips, the US leader of memory chips. Almost $14 billion in grants and loans, crucially, seems like a lot of money. It's not really, is it?
Well, I mean, for somebody like you or Micron, it really isn't. For me, it would be a lot of money. I mean, 6.1 is guaranteed, right? But when you put that in context of the $125 billion that they're looking to put into a factory network that's going to be built over the next few years, clearly that's not. I mean, it will help even the cost base between building here versus building in Asia, where they have most of their facilities right now. But it's not a freebie by any stretch.
The memory market's really interesting. Historically, commoditized, boom and bust cycles. We're talking about principally DRAM and NAND or flash memory. The next generation of memory goes into data centers for AI. And Micron is competing against those big names, Samsung, SK Hynix. Why are they wanting to onshore this basically in America? What's their kind of play here?
Yeah, I mean, there are a number of things. We had a conference call with the political leadership behind this bid, and they're basically like, look, we can't afford to have all our eggs in one basket. Look what happened during the pandemic. We need production of this increasingly important technology in the United States. And as you just indicated, it isn't just a commodity or won't be just the commodity that it has been in the past. So we need this key technology in this country is the argument that is being made.
We're talking about HBM3E or high bandwidth memory, and we've done a lot on the program. Our audience will know, and we will continue, I'm sure, to talk about it. In the moment, Intel is the next kind of big chip name to report after the bell. What are we expecting?
Yeah, expectations are very low. I mean, this is a stock that's down 30% this year, way below what the SOX index, the key semiconductor index, has done. We already know that their operations are struggling. We know that their manufacturing is poor. The key question that we're going to see answered today is, are PCs getting a little bit better? Are companies and hyperscalers starting to spend on server chips again? That's really what people want the answer to.
It's the same story every quarter, and we wonder if the story changes when it comes to earnings. We're looking forward to that one. Ian King of Bloomberg News, thank you. I want to go back and look at shares of NVIDIA. It is an outlier in the markets this morning, as is the Philadelphia Semiconductor Index, or SOX, largely because of the pull upward from NVIDIA. Last night, when Meta reported its earnings, in after hours, there was a notable move lower in NVIDIA by about 1.5–2%. It's now higher, 2%. And I guess if you extrapolate the logic, there was concern about how much Meta is going to spend on AI infrastructure. When we talk about AI infrastructure, we're talking about NVIDIA's high-performance GPUs or AI accelerators that are going into data centers. That's where that Meta money will be spent. Stocks up 2%. We'll be right back. This is Bloomberg Technology.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election?
It's for the American people to decide what they want. With the
politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Let's talk again about Meta. The stock is back down 13%. It's off session lows, but there's a lot of anxiety in technology more broadly based on what we had in Meta's earnings and basically the commentary on the AI infrastructure spend that's going to happen. Jefferies Brent Dill joins us now. On Meta specifically, because I think we need to have a sort of bigger picture conversation. You cut your price target to $540, I think, from $585. But are you actually anxious or worried about what you heard last night from Zuckerberg?
Not at all. I think this is a gift for investors. You know what I think we've learned in AI, you need three things. You need users, you need data, and you need money. And the list of vendors that are going to survive is very small. And Meta is going to be one of them. And so for long-term shareholders, this is a great opportunity. They're going to do $25 of earnings power. You can put a low 20 multiple, to mid 20s, and you're going to get anywhere between, 500 plus to 600 plus in the stock. And so when you look at just, back of the envelope on earnings, it has huge support with the stock trading at 16, 17 times right now. I think in terms of the worry, I don't worry because I think they're doing the right thing. These investments are not going into the metaverse. They're going into AI. They're going back into the core platform where there are billions of users that are trying to have better engagement. It helps advertisers create campaigns faster. It's going to send more ad dollars into the platform because it's going to be so easy to create a campaign and find a new user for your travel company, for your apparel company, for your beauty company. They'll be able to find more users in a more relevant way. So we think it pays off. So I'm not worried.
So let's push ahead to Alphabet and Microsoft. And if I draw a commonality, and there is an anxiety with what happened with Meta, I guess it's the idea that for all the billions of dollars and data centers around the world that are being built, it doesn't yet translate tangibly to revenue growth that is selling an AI product directly. Is that a thesis you share?
We are in the age of AI hype. We are not in the revenue cycle yet. At our private internet conference last week, we had many of the top AI leaders, and everyone said that AI is in infrastructure, right? It's in NVIDIA, as you were talking about before the break, and you're dead right about this. It's in NVIDIA, AMD, Dell. You look at all the enabling infrastructure, it's there. It hasn't gotten to the application layer. And for all of our companies in software, it's a single-digit percent of revenue. 95% of these AI deployments are proof of concept. Less than 5% of them are live. I mean, how do you monetize when you're in proof of concept? And so I think what we're seeing is this building interest. IBM talked about, $1 billion backlog number last night on their call. That was, a few hundred million just a few quarters ago, right? The interest is building But in terms of the overall impact for the software ecosystem, it's still not there yet, and it will be. Microsoft remains in the best position because they are the furthest ahead. They have the most vision, and they have the best management team of anyone in software with no questions asked. So they're going to be in a great spot. But it's even for Microsoft, it's going to take time. And again, we've said this, the AI revenue reality is kicking in later this year into 25. And that's why investors want to be overweight semis, or the SMH is massively outperforming. That's where our clients are, and that's why these stocks are all green today and all my stocks are red.
Hey Brent, I'm not asking you to do my job for me, but I'm going to speak to Ruth Porat after the numbers hit this afternoon. What do you think I should ask her?
The number one question for Ruth is, there's two. One is, when is the new CFO coming on board? It's been 9 months. And you haven't effectively updated us. Two, if you did simple things with investors, your stock would go up 15%, or your multiple will go up 15%. Google is the least shareholder-friendly company of anyone in tech. And there's just simple blocking and tackling they can do to get the stock higher. Have an analyst day, bring people in, talk about what they're doing in AI, put a financial framework. They're the only company in tech that doesn't guide. Meta, Amazon, Microsoft, go through the list. They all give some color. There's no color. So with no color and no insight and no hand holding, our clients are like, I want to be able to do the work, and I can do the work on these other companies. And right now I think investors are frustrated. They're frustrated with that. So one, CFO, and two would be, do you realize how easy it is to get your stock higher if you follow the simple playbook?
Brent Thiel, Jefferies, I appreciate the help. Thank you. Wow. That was not an answer I was expecting, I have to be honest. That does it for a pretty packed edition of Bloomberg Technology. It was a big morning in markets, but technology stories were at the heart of it. So recap, listen to the podcast on Apple, Spotify, iHeart, and we're also posting the pod, which so many of you are listening to on the Bloomberg platforms. Again, buckle up, earnings is the story to come. From San Francisco, this is Bloomberg Technology.
Shortly expecting results of the Freddie Mac mortgage rate statistics for the US.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg News Now. News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Welcome to Bloomberg Markets. I'm Shonali Bassick. U.S. economic growth slows and inflation.
US 30-year fixed-rate mortgages 7.17% April 25th week versus 7.1% in the prior week.
Let's get a check on these markets because you are seeing a steep drop lower. The S&P 500 down more than 1%. The NASDAQ 100 that started the week on a high note now down about 1.4% on the day. The Dow Jones Industrial Average also down about 1.5% on the day. The VIX marginally on the rise. Let's flip up the board here and take a look at yields and where they're headed because you have traders recalibrating their expectations and the 2-year yield just a touch under that 5% level once again. We have been seeing massive volatility in the bond market. Of course, on a week with a lot of auctions as well. The 10-year yield now at 4.70 on the day, a 6 basis point move higher. And New York crude hanging out around $82. That is 0.3% lower. Gold, once again, on the rise, has been a favorite asset for traders all year long, about 0.5% higher. Some midday movers here on the equity side here, flipping up the board. We're going to start with an economic bellwether, Caterpillar, reporting quarterly sales slipping from a year earlier. The company warning that the trend is expected to continue in the second quarter. Caterpillar told investors in February that sales would be largely in line with 2023, but that now seems to be shifting. The company has beat expectations in almost every quarter since 2020, and we're going to talk more on the equity side here because in addition to that 7% drop in Caterpillar, we're looking at Meta intraday also dropping pretty dramatically, tumbling more than 12%, almost 13%. The company announced that it will spend billions more than analysts expected on its AI efforts. Mark Zuckerberg is asking investors for patience. They are not too patient today. Zuckerberg saying that the futuristic technological bets will eventually pay off. Bloomberg's Abigail Doolittle has more on Meta and the downward pressure across tech.
Yeah, it's interesting to see that plunge today, Shonali, the worst day since October of 2022. And I would argue some of it has not only to do with the fact that the guide a little bit light and also a bigger spend for AI. Take a look at the shares of Meta here in this Bloomberg terminal chart in white up top. At one point, up more than 40% this year alone. Over the last year into this quarter, up about 130%. So price to perfection, investors simply did not get that. So you can see the big plunge. Now, what we have here below in yellow and green, Microsoft and Google both up. We have Microsoft up about 5%, Google up about 11%. Actually, let me make sure that is correct. And then Tesla coming off of its bottom after a little bit of hope around the cheap EV. But my point here is, again, Meta price to perfection coming back to earth. What's ahead, though, for Microsoft and Google? Because that result for Meta, that big AI spend, really weighing on both of these shares. Microsoft having its worst day, I believe, since October 2022 or January 2023, so more than a year, depending. So key for Microsoft will be where earnings and revenue come in. Right now, analysts are modeling mid-teens growth, which is pretty solid. The bigger deal, though, could be Azure, that cloud growth. Will it come in at 28%? And then, of course, the AI Copilot. What is that revenue spend going to look like? Some analysts are saying that it's going to be talked down. One analyst saying that for Microsoft, it's all about surviving and advancing. That may be the case for Alphabet, too, given this tough tape relative to Meta. If we take a look at for Google, they have an unusual circumstance relative to some of these other big tech companies. You can see solid, okay revenue growth over the last few quarters, but into this first quarter of 2024, down 5.3%. And that's not even expected to end, Shonali. Take a look at the June quarter. That's also expected to be down about 3%. So they will be talking about that to some extent. Will search hit the 11% growth metric? A lot of analysts are saying not, but maybe pricing and query volumes could offset. And then it's going to be all about that cloud and AI, the AI spend and cloud. They could see some sequential revenue growth. Some analysts are saying a little bit of hope there because of the AI workload.
Thank you, Abigail. We're going to now talk about a different part of the market, a big move on Wall Street happening right now. Cantor Fitzgerald has got the backing of major names on Wall Street for its upcoming new futures exchange, FMX. Investors from Bank of America, Barclays, Citadel Securities, Citi, Goldman, and JP Morgan invested more than $170 million for a nearly 26% stake in FMX, which will increase as they keep using that platform. We're going to bring in Cantor Fitzgerald Chairman and CEO Howard Lutnick. You've talked a little bit about this before, this idea of taking on CME in the futures business. How do you take on a giant today with the help, frankly, of every major Wall Street bank?
All right, so BGC Group, public company, owns this exchange, right? And so we are the wholesaler of the world. So you think when Fidelity or PIMCO, when they wake up in the morning and they want to buy something, they call a big bank. Who do those banks call? Like, what do they do? So BGC Group is the broker in between. So we're sort of the exchange for everything in the world that doesn't trade on an exchange. And everybody always asks me, if you're the exchange for everything that doesn't trade on an exchange, why don't you become an exchange? So BGC set up FMX to build a futures exchange to compete with the incredible monopoly of in America, the Chicago Mercantile Exchange, which is awesome. It's worth $80 billion and stands alone, did 99% of futures in America last year. It seems like a monopoly to me. So all these banks came in as our partner. 10 of the greatest trading firms, 1 through 10, JP Morgan, Goldman Sachs, Citigroup, Morgan Stanley, Wells Fargo, Barclays, I know I'm going to leave someone out, it's great. Bank of America, Citadel, Jump Trading, the #1 futures trader in the world, Tower, #1 Treasury traders. These all are together, all coming behind this exchange to make this exchange so fun and so amazing.
Well, here's the question. If CME, as you say, has 99% of the volume here, how come these banks have supported you in this? What is the outcome that you and them are looking for?
Well, look, when you're alone like the CME, they do, as I say, they have a great product and they charge a great price. Like, holy moly. And sort of like every Christmas, they just raise their price. Hey, it's a Christmas present. Let's just raise our price. So the banks want an alternative. They want a competitor. And what else they want is innovation. So we have the fastest system, right? The tightest spreads. And we did this in U.S. Treasury. So we started with the U.S. Treasury. Now, the CME had, when we announced that we were going to be in the U.S. Treasury market, like an exchange, they had 85% market share, the CME. So I call them the heavyweight champ. Right? And there was 15% by other players. So we went in, we now have 28%, and they're in the mid-60s. So if someone thinks we can't get a glove on the champ, they're wrong, they're not watching. So the Treasury business was one. Now we're going to do Treasury futures. You might say, well, why shouldn't you win in that as well? And the answer is, I think we're going to. And we're going to do SOFR futures, which are like interest rate swaps, and that's going to be amazingly cool as well.
You've been talking about this interest rate business, Treasuries in particular as well. Are there other markets that you would look to break into that you're not currently in?
Well, we're going to start with the interest rate world, but when you've got the world's greatest trading firms as your partner, they're going to say, what's next? And I would think other futures exchanges to start will be a classic move as we go around the world. Equities, bonds. It's a futures exchange. You can do anything. So it's really fun. We have the technologies already in place. See, the thing about BGC Group is it already has the connection to all these people. We don't have to start building it today. We're going to open in September, right? And we're going to start, and with a futures exchange, you just want everybody to connect. So the first year, we're going to get everyone to connect. Second year, we're going to get everyone trading. And in the third year, it's going to be full-blown, full-on competition for the $80 billion heavyweight champ.
We'll talk about that timeline in a second, but you had mentioned the Christmas present of higher fees from the exchanges. Do you plan to lower trading costs on this new venue?
Would the word for certain be helpful? Yes, absolutely, absolutely, absolutely. The concept of being much more efficient, much faster, and much cheaper. We'll create more volume. We'll be innovation. We'll do all sorts of things. We'll build, as an example, if you want to trade one futures contract against another futures contract, it's built into the trading system so you can't miss. It's automatically built in rather than two different systems sort of trying to figure it out. I mean, you can just be innovative, clever, smart, and faster. And the banks are all behind us, the greatest traders in the world behind us, the greatest technology that's already installed. I think if I don't seem like I'm having fun, you just haven't spent time with me. This is so much fun for us.
Howard, today it's valued at $667 million with the new backers that you've brought on board. You've kind of mentioned a 3-year timeline to expand the business. What is this company valued at in 3 to 5 years?
Well, it's sort of like one of my favorite thoughts is when George Clooney tasted some tequilas, right? And he bought a tequila company. How much was that tequila company worth? I think he bought it for like $7 million. And then he sold it for $700 million. So these banks are my George Clooney. You know, I see them, I'm like, these guys are just so, these men and women are just so handsome.
Do you have a goal? Do you have a target on how big you want to get?
I think we want to gain market share like we've done in U.S. Treasuries. Our U.S. Treasury business, which competes with the Chicago Mercantile Exchange, grows 1 to 2 points market share every single quarter. So we were 26% at the end of the year. We just put out this morning with you guys, 28% this quarter, so 2% per quarter. I think we're going to keep growing. We'll get to half. And I think our futures exchange will just keep growing, and eventually we'll get to half. And I think that eventually will become enormously valuable for us, for competition. It'll drive down costs. It'll drive up volumes. It'll be great for America.
It's interesting to hear you come in and talk so much about growth, because when you look across Wall Street right now, it's hard to find a lot of growth, particularly when it comes to headcount and expansion. What does this mean for all of your companies, Cantor Fitzgerald, BGC, in terms of what you want to be able to do? Bring more people on board? Is that possible for you?
Sure. I mean, when you're innovative, you can create new things. So we're hiring tech people up a storm. BGC is growing amazingly. A stock was up. BGC Group was up 90% last year, and it's on a tear again, and it's going to be. Imagine you have this exchange where all these banks bought in at a $667 million valuation. But that was yesterday. What do you think it's worth today with all these banks as your partners? Multiples and multiples higher. I'm sure private equity firms would love to invest at 3 or 4 times that much. We aren't sellers. We're going to build a great business. BGC is growing up a storm, and so is Cantor. So I think there's lots of growth ahead.
So let's talk about the markets now, too, because you're in the Treasury business. Of course, we have the two-year about to touch 5% once again. A lot of expectations changing in this market. Treasury auctions coming at really a record clip, almost across the curve. What kind of volatility does that create, and where do you think the Treasury market really goes from here this year?
All right, so you have 2 things that are incredible to think about. The Fed's balance sheet is $7.5 trillion, and that's got to come down. So that means they're not going to buy the Treasuries. They need someone else to buy them. That, coupled with our beautiful government running deficits of $1.8 trillion a year, so you've got just huge supply coming. That's got to keep rates higher for longer.
How
it
high?
has to keep rates higher for longer. I view it as steady. Right? When I was here in January with you guys, I said rates would be steady. And where have they been since then? Steady. Remember, people were talking about 6 or 7 cuts? I was like, ha. Like, who's cutting 6 or 7 times? I think the Fed is going to stay steady. I think inflation is stubborn. We're hanging in there. You're seeing it, the 2-year note. Think about this. The market is saying 2 years at 5%. So what's the core market really saying? They're saying we're not really going anywhere, right? What short-term rates are at 5.25%. So if you said the average for the next 2 years was going to be 5%, right? What you're saying we're going to stick around here, and we are. So the Fed has the ability to cut a little, because remember, if they let go of their balance sheet, that's tightening, right? I'm not buying anymore, you're going to buy. That's going to take money out of the system. When the Fed stops buying and cuts its balance sheet, that's a tightening. So the Fed can cut a little bit of interest rates.
When's that first cut?
I think right before the election. Not that the Fed is involved in elections, but September? I'm thinking September, and it's not really to move the economy. It's to show off a little bit, help a little bit. You know, the guy who's employing you today, maybe he'll give you your job again if he gets elected. Can't hurt. So I think September, one cut. That's it. Just showing off, not really doing it.
Really curious about your views on the election here, too. Earlier this month, you hosted a fundraiser for Donald Trump alongside John Paulson in Palm Beach. What would a potential Trump presidency, Trump 2.0, what would that mean for the markets?
Well, again, last time, if you remember, there was a lot of consternation when he was elected. And my view was it will be good for business, it will be good for the banks, and it was. The banks traded incredibly well. You know, the Republican Party is a less regulatory party, right? You saw the Federal Trade Commission just came out and said non-competes are something they want to do away with. That's not really business friendly, right? So an administration that's more business friendly probably is good for stocks, although you can't say lately Joe Biden's not good for stocks. The market's doing perfectly fine and stocks are doing perfectly fine. So I think it's not going to be as much as people think, but I think a Trump administration is just less regulatory, which businesses like, less like with the Federal Trade Commission saying non-competes, you know, they got sued right away. So it just seems overbroad. Less regulation is good for markets, good for business, and I think businesses like that better.
Well, what do you think this means in terms of the attitudes from the business community around Donald Trump? Do you think that there's any changes that you've seen, particularly given that you have such a close ear to the ground?
I think you feel more coming. I think they were afraid in the beginning. I think when it was still during the primaries, but you feel more and more people coming. Surprisingly, people who would never have said that before come up to me and say, you know, I'm thinking about it, because they really don't like immigration. I mean, immigration is just something like, who talks about immigration at dinner parties? The answer is these days, everybody talks about it. I mean, you have it in New York everywhere. You have it in San Francisco everywhere. So immigration matters. And just the things like today with the Federal Trade Commission. I mean, it's just, you know, it's just big regulatory push. So I think business is moving more towards the Republican side, surprisingly more towards the Republican side than they were before. But I think it's going to be a tough fought election. I really think it's going to be dead heat close.
Dead heat close. How do you think that translates to volatility into the markets throughout the year and into next, even, given the challenges you're seeing around the world and given the challenges you're seeing in the U.S.'s own economy starting to come up?
I think big volatility come the end of September, going into the election. I mean, the uncertainty. Well, investors tend to put their hands in their pockets when they don't know what's going on, right? When you have a good confidence of where you're going, in you go investing. So I think volumes will decline a bit and volatility will rise because people won't know which way they're coming or going. So I think October is going to be just a crazy time because people won't know what the heck is going on. And the election, you know what's amazing about elections in America, once it's settled, markets go right back to normal. So I think once it's settled, I think you're going to have a much better market than you're going to feel in October.
Another volatile asset, Bitcoin. You have been very vocal in your kind of constructive view about Bitcoin, particularly as it's used around the world. Interesting, though, you did say that it would be benefiting and rebounding this year, but you didn't say that the ETF would necessarily bring it there. Would you be a buyer of Bitcoin at these levels?
I think, so Bitcoin just halved. Right? Which means that the work you do to get a Bitcoin, the price is twice as high. So that is theoretically a benefit for the next 4 years for Bitcoin. So I think over time, Bitcoin will rally even from here over the next 4 years. So if you bring me back 4 years from today, I think the market will be higher. And I think these things, it has a place in the world and it's not going away. So I think that's sort of the the way to think about it.
You've spoken about your optimism around Tether as well. I'm curious about your view on this because recently S&P analysts have said if the latest U.S. stablecoin bill passes, that U.S. companies would no longer be able to hold or transact in Tether because it's run by a non-U.S. entity. How do you prepare for something like that?
Well, I think, first off, Americans, stablecoins in general, there's two big ones. There's Tether and there's Circle, okay? And Americans should have nothing to do with these things. I have dollars in my pocket. I have dollars in my bank account. I have a credit card in dollars. I can Venmo you, PayPal, Zelle. These are all simple things for Americans. We have no business being near stablecoins. But I tell you what, Argentina, Turkey, Venezuela, if our money, right, if our bank account, we woke up with the Turkish lira, which was down 65% last year, we'd be doomed. So you want to hold the digital dollar. So that's where Tether really flourishes. It's in the emerging markets. So the concept of trading stable coins in America, I just don't get it. So I don't think it has anything to do with America. I think what we care about as Americans is that the dollar is all powerful in the world.
Do you worry ever that there could be the use of Bitcoin or Tether being used to evade U.S. sanctions, given the use of it around the world, particularly coming out of Russia?
I think the key to digital is that it's always digital. You know, dollars, you remember when we went into Iraq, they found like rooms of $4 billion on pallets. That you can't trace, but digital money you can trace. I think the firms like Circle and Tether have to work deeply closely with law enforcement and grab it. Because remember, these are digital money. All they can do is move around, and the blockchain always keeps track. So think of the AI and think of the tools the government's going to have. They are going to get better and better. The way I describe it is government moves reasonably slowly, but it always gets there. Sooner or later, it'll get there. So they'll have great AI tools. They're going to use their AI tools. Any criminal who wants to use Circle or Tether is going to get caught. It's going to get seized because it's digital. So it means you can't really hide it. It's on the blockchain. You can follow it from here to here to here to here. So I think it's good for news to say, oh, they're using it like this and this, but they're all going to get caught. They're all working. Tether and Circle are working closely with law enforcement, and these crooks are just, it's so much worse than a regular dollar. At least a dollar in their pocket they can hide. How can they hide a digital dollar? That's a joke.
Howard, we thank you so very much for breaking your big news with us. Congratulations on getting this venue off the ground and for all of your candor. That is Cantor Fitzgerald, Chair and CEO Howard Lutnick. Stick with us. Much more news ahead. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build. So it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
latest GDP data sending yields to the highest levels of the year as traders now expect the Fed to cut rates, possibly in December at the earliest. Bloomberg's Sydney Maki joins me now to discuss the changing expectations. Why was this GDP data enough to start moving the needle in terms of where Fed swaps have been moving to show these changing expectations?
So it's interesting because the data that we saw come out this morning not only showed GDP, but also a core underlying inflation gauge. And that is really what the bond market focused in on. So we saw this move higher in yields. We saw the rout in treasuries continue in the wake of that data. And it goes to show that if you're a bond trader on Wall Street right now, it is extremely difficult to ignore the repeated evidence that we've seen coming from economic indicators that shows inflation is rather sticky in the US. And that makes it more and more challenging for Federal Reserve officials to end up cutting interest rates. At this point, we saw swaps traders this morning go ahead and push their expectation for the first fully priced in Fed rate reduction to December. Before the data hit, it was in November still.
How do you feel about the upcoming economic data? We still have PCE before we see that big Fed meeting next week. How do traders really think about this volatility and how to reposition?
I think it depends on what the data shows. Of course, Fed officials have come out and repeatedly said that they have little choice but to be data dependent, that they are watching the indicators very, very closely, and the market is doing the same. So with PCE tomorrow, of course, that will set the stage for next week's Federal Reserve meeting, as well as Treasury refunding. And we'll have employment data come out next Friday, which will once again give us a good gauge of how the labor market has been behaving and whether the Fed can truly go ahead and rein inflation in enough that they can reduce interest rates. The timing, of course, gets more challenging for a rate reduction the further into the year we get. We have elections and other complications that just up the ante and the focus on when exactly these rate cuts will come.
Sydney, we thank you so much for keeping an eye on all the moves in the bond market. That is Sydney Maki of Bloomberg News. We're going to talk more about the economy and markets up next with Jim Bianco. Of course, we are seeing a stiff move downward in the stock market and, of course, a sharp move higher in yields. Stick with us. All of that ahead. We will make sense of all of it for you. This is Bloomberg.
So seeing according to sources, TikTok owner ByteDance is to prefer shutting down over loss-making app rather than a sale if it exhausts all legal options. So the algorithms TikTok relies on deemed core to ByteDance's overall operations, making sale of the app unlikely according to sources.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable, not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, Well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Markets. I'm Shonali Bassick. Let's check on these markets because, of course, we're still heading lower. You have the S&P 500 not as low as it was before. We are off the lows of the day, but we are still above 5,000, and we are down now 0.8%. NASDAQ 100 still maintaining its losses of more than 1%, as is the Dow Jones Industrial Average. VIX slightly on the rise. Let's take a look at yields, though, because this is where you're seeing the big sell-off. The two-year yield, you're looking at just under 5%. You are looking at a 6 basis point move higher after that GDP data, and you have the 10-year yield now at 4.70 on the day, also 6 basis points higher. Crude taking a leg lower, down now 0.3%, and gold spot on the rise once again. Some midday movers on the equity side. Let's look at Southwest Airlines, slowing growth, ending service at 4 airports, and offering voluntary leaves to address significant challenges stemming from reduced deliveries of Boeing planes. The carrier said that it would end the year with 2,000 fewer employees than in 2023, and flying capacity growth will decline to 4% in 2024. Southwest now down almost 7.5%. Micron was awarded $6.1 billion in grants and as much as $7.5 billion in loans to build new factories here in the United States. The chip maker pledged to invest about $125 billion to build 4 factories. Intel, TSMC, and Samsung are also getting grants from the CHIPS Act. You now have Micron up about 0.2%. And then, of course, Hertz shares lower after reporting a loss that was nearly 3 times worse than analysts expected. Its accelerated sales of EVs to reduce its fleet of Tesla models have weighed on profits for the past year. We have Hertz really now down about 18% on the day or more. Back to the economy, though, because strong consumer demand and muted price pressures that had fueled optimism for a soft landing are beginning to sputter because first quarter GDP growth grew lower than expected. Here's what Stifel CEO had to say about the latest data.
I think that the fact that we believe inflation is going to prove more sticky than it has, sticky for us would be that the Fed's preferred measure, which is core PCE, it may settle at 2.5 versus 2. And the Fed's not, I don't see why the Fed would be, rushing to be cutting rates into an environment where inflation is still sticky.
Jim Bianco is the president and macro strategist at Bianco Research. He joins us now. Jim, how do you take a look at the data this morning, knowing that we have more data to swallow ahead?
Yeah, the headline number looked a little bit weak, but when you look underneath it, a lot of it was trade and was inventories that dragged the economy down. So the traditional measures of spending have been there. And then it was the inflation numbers. They were above consensus, 3.7% annualized rate for the personal consumption deflator. And that's a problem because it's suggesting that the economy is not slowing enough, if it's slowing at all, that it's bringing down inflation, and that inflation is going to continue to stay a problem. And that's what I think was the primary catalyst for bond yields to hit a new 6-month high today.
Well, you look at the 2-year alone and you see it just nearly touching 5%. It's just trying to break into that level. How do you think that this kind of changes the calculus around how people are willing to trade this bond market?
Well, I think the problem you're going to face, especially when you focused in on the 2-year correctly, is that we seem to be pushing out the rate cut all the way to December. Well, that's the process maybe of bringing a rate hike in, because if you don't bring a rate hike in, there's a very limited amount that the 2-year yield can go up. I mean, if the Fed's not going to raise rates anymore, it could still go up some, but not a whole lot. And if the economy is not slowing, that could actually become somewhat of a stimulus for the economy, that you might need even higher interest rates. But that said, I do think that you're going to probably see rates head higher, but not as much more from here. To use a baseball analogy, probably in the 7th or 8th inning of this rise in rates. And if you know baseball, a lot can happen in the final innings of a game, but you're getting towards the end of this move right now. And it could be very painful, especially for risk markets like equities, because as rates went above 4.5% in the 10-year note, the stock market has really been struggling. And if it goes to 5, it's not that far away right now, I think it's going to continue to struggle.
How much would it struggle from here, and which assets struggle the most in that scenario?
Well, let's go back to last year. From July to October, the 10-year yield went from 3.80 to 5%. The 10-year, the S&P 500 corrected 10%. It's gone from 3.80 now to 4.70 in this move, and the S&P's corrected 6%. It's almost like it's a complete overlay of last year. So if you just follow that, you can have another 10% correction. And look, we're more than halfway there as well. And what typically has been really the interest rate sensitive sectors, the smaller cap stocks, value stocks that matter more for interest rates seem to be struggling a lot more. I know that today, you've got Meta and some of the other big Magnificent Seven stocks really struggling on the back of those earnings. But it will be a big headwind for the stock market, these higher rates.
Speaking of more stocks here in the middle of earnings season, you saw such a big shift in sentiment heading into this week. So much optimism. There were days where every Magnificent Seven stock was in the green this week. And now you look at today, and there's a very different story going on. How do you really handicap how to feel about big tech in this environment?
It's funny you brought that up, because I noted that too, is that by Tuesday's close, 2 days ago, it was like everybody's like, the stock market's on its way. It seems to be doing well. And I was like, did we memory hold last week? It was the worst week in a year. Did we memory hold the 6% correction? We're not near the all-time highs in the stock market right now. And then reality hit us yesterday, and reality is hitting us a little bit more today, that this is a correction and that there is some headwinds that the market has to face. And we're going to have to basically, I think we're going to have to reassess our views about big tech, and I think we're going to have to reassess things. Now, that's not to say the market's going to go down, but we had a straight line 28% rally for 6 months in the stock market. That's extraordinary. That's already happened. Now we're in a correction stage. Now we'll probably hold most of those gains, but if people think that, no, it's supposed to straight line 28% all the time, you've already had it. And if you didn't capture that one, there's probably not going to be another one like that for a while.
Hey, Jim, how do you think about the potential at this point, not about rate cuts, but around rate hikes? If you think about the risk that you kind of presented earlier, it's the risk that rates go even higher from here. What are you watching to kind of gauge how big that risk could be at this point?
So you've got one rate cut priced in for the year, down from 6 a couple of months ago. I would probably say that the probability of a rate hike is above 0, but it's not above 50%. So, none are priced in, but you're leaning that way. All year we've seen beats in payrolls and in CPI, retail sales, and a lot of the big headline numbers. If we continue to see beats, that probability of a rate hike will continue to increase. But let's throw the calendar in there too. It's an election year. These numbers could massively beat, and the Fed is not going to raise rates if that's warranted until the end of the year. And the problem that they face is if it's warranted sooner, they're going to probably stall because of the election, and that could actually overstimulate the economy. So we better start seeing some slowing in the economy here real soon. Otherwise, this rate cut will become a rate hike, and it will become a rate hike months away because of the election, and that could be very problematic.
Well, what do you think about the potential for things to slow a little faster than people expect? Thinking back about this GDP data and the mixed bag you're really getting with the idea of slowing GDP but still persistent inflation, and you wonder whether rate hikes at this, or rate staying stable at this level, at what point does that ripple effect start to weaken things faster, perhaps much faster than many are expecting right now?
Well, if you look at the GDP number, what you saw in it was a weak government number. It only added 0.2 to overall 1.6% number, where the government has been adding a lot more than that. Now, the government has not found some austerity program that is going to rein it in. You're probably going to see either revisions to that number or a big bounce back in the subsequent quarters of that number. Same thing with trade and exports. They dragged down GDP by 1%. They had been additive to GDP in the quarters coming in. That's going to come. So what I'm trying to say is that you take a look at those numbers that drag down GDP, and the consumer spending numbers are staying relatively strong. I'm having a hard time seeing where that slowdown in the economy is going to come. Oh, it will slow a little bit, but probably not enough to rein in inflation. Today's number is a good example of that. 1.6% headline did not comfort the bond market that we were reining in inflation. And so if we continue to see stronger numbers, we're going to continue to see higher rates, probably pushing through 5%, and getting everybody all worked up that inflation is a real problem.
Jim, we thank you so much time for such a sober view on these markets. That is Jim Bianco, president and macro strategist at Bianco Research. Now, coming up next, more earnings. Royal Caribbean CEO joins us to discuss travel, consumer demand, and the latest earnings results. Stick with us. Looking forward to that conversation just up next. This is Bloomberg.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
It meant that you always look different because you were the first woman, or the first brown person, the first Asian, the first Indian, the first person of color to lead a global luxury brand. You're always the first. You're always underestimated. People don't know exactly what to expect. They're suspicious of what your agenda might be.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This This is Bloomberg Markets, and I'm Shonali Bassick, and it's time now for the stock of the hour. Royal Caribbean shares moving higher after the cruise operator boosted its full-year profit forecast, and demand for cruises continues to surge. Let's discuss this with Royal Caribbean CEO Jason Liberty. You know, it's interesting, Jason, because a lot of folks look at the cruise industry, this tremendous rebound since COVID, and this idea that, yes, a lot of people have come back. You boosted your forecast. A lot of people are coming back. How convinced are you that this boom can keep running, and at what pace?
Well, first, it's great to be here, Shonali. Thank you for having me on today. Obviously, we feel really bullish about the demand that we're seeing from our customers and the sustainability of that demand. And I think it's in a few different ways. One of which is the cruise industry is it's about $65 billion a year in revenue, and that's a fraction of the $1.9 trillion travel economy that's out there. And so we think that this is just because we're just such a small sliver. There's just a lot of opportunity. Then when you kind of get into consideration to how we trade versus land-based vacation, there's still a pretty steep discount or value play on a cruise. But when you start getting into the demographics and secular trends, on the secular trend side, you've seen now experiences outpace
Fed bids for 7-year notes totaled $209.7 million.
Twofold coming out of COVID. So people are looking for experiences, multi-generational travel, which very much supports the demographics that are going on. And we happen to be in the experience space. The last point I just want to make on the experience side of it is that one of the things that you really see is that our guests are looking to walk away with great experiences and great stories. And we really have focused our business on making sure that we're competitive to land-based vacation. And we're closing that gap to land-based vacation on both a pricing standpoint and also beginning to pick up on gaining share from land-based, which is a very high priority for us.
As you have new customers, something I've been wondering about is how much you have to outlay to support those customers. You know, I hadn't really thought about this before, but Royal Caribbean must be buying an insane amount of lobsters and bananas. I mean, how are you spending these days, and how is inflation impacting you?
Yeah, well, we have on average somewhere between 170 and 180,000 guests with us each and every day. So we're obviously buying a lot of commodities that support that. We buy probably close to 100 million bananas a year, about 500,000 eggs per week. So there's a lot of volume that goes in to support this business. But one of the things that we saw as we kind of crossed the year is a lot of those commodities not only flattened, but they've begun to come down a little bit. Obviously, we saw a lot of inflation occur in 22 and 23. And fortunately, we did the hard work during the pandemic to right our cost structure, which absorbed the vast majority of that inflation that came into our business.
You know, another question that people have is the demographic you're playing with here. You know, it's interesting. Another word I hadn't really heard before is new to cruisers. Are you getting recurring bookings here from die-hard cruise goers, or are you getting new people who are coming on board?
Well, on our loyalty base, for sure, we've seen about a 30% rise in repeat rates just here in the past year. So our loyal guests are very keen on sailing with us over and over again. But the rise in new to cruise and the rise to new to brand has been very impressive. And today, about a third of our guests are new to cruise, a third of our guests are first to brand, and about a third of our guests are loyalists. And we've seen a huge change in that shift over the past couple years. I think one of the other interesting facts is that the average age of our guests is also getting younger. 1 out of every 2 guests is now millennial or younger on our ships. And so we're also, the consideration for cruise has really reached to a competitive level with land-based, and the millennials are really seeking those experiences. And when you combine it with the best ships in the world, and going to the best destinations in the world, and us having our private destinations right off the coast of Florida here, that's generating a new wave of demand that we did not see pre-COVID.
You know, more cash on hand, all of these new to cruisers. How do you see yourself expanding moving forward? Is M&A a potential to expand?
Yeah. Well, certainly M&A is always a potential. I think for us, we're very focused in excelling in our core and growing our core. I mean, we've been very deliberate about having the best brands and the right segments with the best ships and going to the best destinations. So we're investing quite heavily in our core, growing our core private destinations, and also a huge upgrade to our commercial apparatus technology-wise to make sure that we're effectively employing things like AI to help curate the experience, to take friction out of the guest experience each and every day. But I think when you kind of put that all together, there's always M&A opportunities. There's always ways that we think about how can we enrich the experience. And most of all, how do we keep our customer in our ecosystem? And that's through loyalty. That's by having the best brands in these segments so that our guests can trade based off of the different experiences that they're looking to do currently.
What do you see the competitive environment looking like, especially when it comes to kind of these newer firms popping up? You have this company, Viking Holdings, focused on the luxury market, expected to try to go public. Do you see more people entering the space, and how do you navigate around it?
Yeah. Well, Viking's been around a long time, and Torsten, who runs Viking, does an exceptional job. And I think it's good for us to have another public comparable that's out there. I think when we look at the competitive set, I think what's important is of course, we always keep an eye on what the other large cruise lines are doing, and it's tough to get into this
In
business
10 minutes' time at 1 p.m. Eastern, the US sells $44 billion in 7-year notes. Prior bid to cover 2 spots 6.1, prior high yield 4 spots 1.85%. Ahead of the auction, latest CFTC positioning data shows speculators net short 362K 10-year note futures, a potential source of covering demand at the auction.
There. I mean, if you think about a 1% share shift in land-based travel into cruise for us is worth 11 Oasis-class ships. And that's what we're focused on doing, is trying to close that gap. And that's the competitive set that we're really focused on.
Royal Caribbean CEO Jason Liberty, thank you so much for joining us, of course, on a very busy earnings day for you. Now, coming up next, we're going to go to the investment banking world. Barclays building out its transition finance as Deutsche Bank's investment bankers are stepping up in a big way. We'll take a look at both banks today on today's Wall Street Beat. This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal.
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
DOJ or other authorities
could face bigger challenges next.
It was going to keep Rain World Cup.
This is a 3 as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg.
Now for some news across Wall Street, Viking Global, led by Andreas Halvorsen, raised more than $3.5 billion for its flagship hedge fund after opening it to new cash for the first time in a decade. That boosts the firm's assets to nearly $49 billion. Viking has a reputation as a solid performer even when peers are struggling during volatile times. The fund started raising in January of 2023 to replace client withdrawals and to capitalize on this market volatility. It will stop accepting new money on July 1st and will be closed for the foreseeable future, according to an investor letter seen by Bloomberg. And it's time now for the Wall Street beat, from the hedge funds to the big banks. The big banks that are now making headlines are out of Europe. Deutsche Bank says they see strong momentum in investment banking, and Barclays say they need more money to go towards climate transition projects, and that will fuel some work for their investment bankers. Joining me now is Bloomberg's Catherine Doherty to discuss what is the play that Deutsche Bank is making here.
So Deutsche Bank is really relying on its investment bankers, its traders, to grow their revenue, because what they're seeing a lot of the rapid rate increases weighing on the revenue from their core lending products. So their recent results are showing the strength in investment banking. It's reflective of what we saw from a lot of the U.S. banks in a return to capital markets for M&A picking up. So it's not only reflective of the strong momentum in the first quarter, which is really what they are talking about right now, but it's an indicator of the rest of the year. A lot of the executives, including Deutsche Bank's executives, the CFO speaking on TV, talked a lot about that expected momentum continuing into the next quarter and maybe even for the remainder of the year.
Deutsche Bank historically really big
in 5 minutes time at 1 p.m. Eastern, the US sells $44 billion in 7-year notes. Prior bid to cover 2 spot 6-1, prior high yield 4 spots 1.85%.
U.S. investment banks in some cases.
Some of the biggest U.S. investment banks, yes. So that is exactly what they had called out as one of their strengths, which it has been historically, and we saw in the first quarter. And they're also calling out their strength from their income of advising on deals. So again, just another sign of pickup in deal activity and M&A.
How do we compare with what's happening from Deutsche Bank to what's happening over at Barclays after they reported?
So Barclays is really emphasizing what they see as an opportunity in middle market, these transition companies that are transitioning from fossil fuel to clean energy. What they're seeing is what they say as a need for the development of projects, and this fine line between being too advanced for VC investors and too nascent for these industrial investors. So it's really a fine line, but they don't see this as an issue. They see this as an opportunity. They've been hiring bankers to focus on this, to advise their clients, and hopefully they think that that will add to their fee income in future quarters.
As Bloomberg Opinions' Paul Davies says about Barclays, investment bankers now should get a move on, as he says. Thanks to Bloomberg's Catherine Doherty for keeping an eye on the European giants. I'm Shonali Basak, though. That does it for Bloomberg Markets for the day. Volatile markets ahead. Stick with us through the close. I'll be joining you back then as well. This is Bloomberg.
Do you feel like this age of abundance over the last few years of just how much was being made?
For my personal taste, I am thrilled at what I get to find every night if I have time to look for something. So I personally don't think too much was made. I think the customer will tell us when there's too much made and they won't watch things. And I think part of the misalignment I talked about before is, imagine if things didn't get picked up or movies didn't get made that people didn't watch or go to see. That's how it used to be. The customer decided. I do think there's going to be less made in the middle price range. I think there's going to be more made in the higher price range, because when you get to global events like Barbie or Oppenheimer or Super Mario Brothers, it's worth the investment, and it's clear that the audience is there, and they just need to be given what they want. The middle, which ends up, quickly on one of the services in a way that we're watching movies that we don't know how they got made or when they got made and all of that. I think that
Shortly expecting the results of the 7-year note auction. At the top of the hour, we do also get the when issued yield.
Things that give more people the chance to express themselves and have their work seen.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching the China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is
When issued yield 4.716%.
Income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Supreme Court justices empathize with Donald Trump's immunity claim. Welcome to the fastest show in politics, as we read tea leaves today in arguments that could determine whether Jack Smith's January 6th trial will take place at all. I'm Joe Matthew alongside Kaylee Lines here in Washington, D.C. A remarkable turn of events here, and certainly against the grain when it comes to conventional wisdom in this case, Kaylee. It's not what we were told we might hear today.
No, certainly we are hearing some skepticism among the justices on the court, specifically the liberal justices, around Trump's argument that he should be immune from prosecution, having committed these alleged acts while he was in office in terms of the crimes that Jack Smith has charged him with. The one conservative justice, Amy Coney Barrett, did express some concern about what happens if there is no potential for criminal prosecution, what would stop a president from doing whatever he wants. And that really gets to the root of this, Joe. What's happening today, yes, is tied it's inextricably tied with the fate of Donald Trump himself and whether or not he may go to trial in this case here in Washington, but it also potentially
Bid to cover 2.48, 2.48. High yield 4.716%, 4.716%. US sells $44 billion in 7-year notes and awards 35.06% of bids at high. Primary dealers take 13.9%, direct 20.99%, and indirect 65.11%.
Bloomberg, he'll be with us at the table, and Elizabeth Wider will join us well with insights. And our political panel is that we've got to remember the political implications here on this presidential race can really not be overstated.
No, especially if what the court decides or decides not to decide, whatever action they take could decide whether or not Trump sees a second trial before that election on November 5th. So we do have a lot coming up on this hour. First, though, as always, we got to begin with a check on the markets because we got a lot of economic data today, and we've seen quite the reaction, haven't we, John Tucker?
Yes, we have, Kaylee, and the reaction is risk off for the most part. In the driver's seat, as you say, that economic data kind of in the passenger seat. I'll say the earnings reports. Traders not too thrilled with either one.
US 7-year yields little changed at 4.723% after the auction.
Growth and higher inflation. Now, normally that would mean stagflation, but smarter people tell me if you look under the hood, that's really not the case. And then you have Meta Platforms helping set the negative tone. The worst performing stock on the S&P 500 after its results after the close yesterday, down 11%. Let everybody know it's going to spend more than investors are comfortable with. Spending more is bad for Meta, but Joe, you had to ask this question earlier about NVIDIA. It's what they're spending on. That's AI. So that is good for NVIDIA, and that's why that stock is up today about 3.5% right now. Also, we are waiting for Google parent Alphabet And shares of Microsoft, they're the next to the so-called Magnificent Seven to report, and that's going to happen after the close of regular trading today. Right now, the S&P 500, 37 points lower. That's down 0.75%. We're at 5,034 in the index. The Dow Jones Industrial Average, 453 points lower, down 1.2%. The NASDAQ Composite Index, 1% lower, 162 points lower. The 2-year yield, that's up 6 basis points. That's at 4.98. And traders are now guessing the Fed's not going to cut rates until later this year. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. A balance of power continues right now with Joe Matthew and Kaylee Lyons.
All right, John Tucker, thank you very much. Pointing out that there is now a chance that we don't get a single Fed rate cut before the election. And we might not get a second Trump trial before the election either, Joe, depending on how the Supreme Court rules after the arguments they heard today.
A massive re-rating from the economy to the political world.
Yes.
And this is why you have to join us every day here on Bloomberg, because it really is remarkable how a narrative can shift overnight. And I think that we can say that's already happened today in the Supreme Court, regardless of how this turns out.
Yeah, we have to keep in mind here for our TV and radio audiences, there were already 2 lower courts that ruled Trump was not immune from prosecution. He had appealed it to the Supreme Court, and everyone was assuming the Supreme Court would decide on similar grounds. Some thought the Supreme Court wouldn't even take up this case at all, which of course they have done. But judging the way the arguments have gone today, maybe it's not as cut and dry as legal analysts initially thought. When they were considering what these 9 justices might do.
A lot of folks told us the Supreme Court wouldn't even take this up at all because the appeals court's case was so strong, so well written. So let's explore some of the nuances here with Greg Storr, as we mentioned, reporting for Bloomberg on the Supreme Court. I can only imagine what your day has been like so far. It's very kind of you to spend some time with us, Greg. It's good to see you. Hearing from Chief Justice Roberts, criticizing the D.C. Court of Appeals decision got everyone's attention today. Is it possible they just kick it down to the court? What kind of options are you weighing in your head as you listen to the justices?
Yeah, the Chief Justice raised that very possibility. Maybe we should kick it back down to the appeals court, or at least we should tell them that reasoning is wrong. Sort of the overall sense in the courtroom was we want to draw a line here between what are official presidential acts and therefore potentially off limits for prosecution and what are not, what are private acts. And the Chief Justice's question and some other questions suggested they didn't think the lower courts had done enough analysis to try to separate out the what's in and what's out.
Okay, so it kind of raises this question, if they're just kicking it down to a lower court to ultimately decide, if this is going to become more narrow, just considering the specific things that Trump is charged with and what he did in office, or if I just wonder how narrow or sweeping and broad ultimately this decision is, whether or not it's made by the Supreme Court or by a lower court that they've kicked it back to.
Well, in terms of the big constitutional principles, they're clearly thinking about something sweeping. They really want to think about this, and Justice Kavanaugh talked about, I'm thinking about future presidents and how it's going to affect them. So in terms of the principles, big. In terms of the Trump case, it really kind of depends. Jack Smith, the special counsel, the lawyer in his office, Michael Dreeben, was basically arguing, look, just on stuff that is undisputably private actions by the president.
Treasuries hold losses after $44 billion sale of 7-year notes.
Even if you think a few things are off limits, let the trial judge sort that out. Let's go ahead right now. So the exact impact of this Supreme Court decision on the Donald Trump trial remains to be seen.
Is it unlikely or possible that the court completely agrees with Donald Trump and the presidency is almost reestablished or reinvented in a certain way?
Yeah, that didn't seem likely. I mean, Donald Trump's arguments were really, really broad that he was making. And even, Clarence Thomas, the very first question out of the box, is basically saying, where is this in the Constitution, this notion of presidential immunity? Yes, he said before, it's not in there. So It's hard to see that Donald Trump wins a decision kicking out the case. That's not likely to happen. But it could be enough to kick the can far enough down the road that we get past the November election, and then if he becomes president, it'd be incredible, but he would have the power to say, Justice Department, drop this case.
Right. So much of this really just comes down to timing more than anything else, Greg. Obviously, the Supreme Court could wait until the last day of their term to rule on this or to issue an opinion on this if they so choose, which would be end of June. If they're just going to kick it down to another court, would they wait that long, or is that something they typically would decide on faster?
Given the scope of the questions, they're clearly thinking about big things, and it's hard to imagine they're going to crank that out in just a matter of a few weeks. So this is the very last argument day of the term, and even under the best case scenario, even if this were an ERISA case or some other kind of narrow area of law, you wouldn't expect the decision until June. So I would be surprised, given the way it went today, if we get a decision before the second half of June.
All right, Greg Stohr, Bloomberg Supreme Court reporter, one of the best in the business. Thank you so much. And that just gets to the point, Joe, of the election timeline, because if we're assuming June, and the judge in this case in D.C., Tanya Chutkan, has said, I will give all parties 3 months to prepare at least for trial.
Yes, right.
Realistically, assuming no further delays, which we know is always the effort of Trump's legal defense team, is to delay. It would be incredibly hard, if not just to begin the trial, certainly to finish it before voters are heading to the polls.
So we're back in this world now where we're talking about imagine a president-elect potentially on trial like that after the election and before the inaugural. This is a possibility, just like so many are. And I'll remind everybody that Donald Trump is actually back in court today, not in the Supreme Court, but in New York, with his criminal trial, the hush money case resuming. Testimony, David Pecker, former National Enquirer publisher, on the stand. And we did hear from Donald Trump outside the courtroom. He stopped to talk to some workers on the side of the road. Kaylee, he talked to some reporters as well. Here he is.
We have a big case today. This judge isn't allowing me to go. We have a big case today in the Supreme Court on presidential immunity. A president has to have immunity. If you don't have immunity, you just have a ceremonial president.
So for more on this, we turn to an expert on constitutional law. Elizabeth Wydra is joining us now. She is the Constitutional Accountability Center president and Supreme Court litigator herself. She's here with us in our Washington, D.C. studio. Elizabeth, thank you so much for being with us. I wonder if you could just first give us your take on what you heard in the arguments today, the kind of questions the justices were asking, the answers they elicited, and ultimately how you think that will shape what ultimately is decided here.
Yeah, I mean, it was really an extraordinary morning at the Supreme Court. Here we have this unprecedented argument for broad, sweeping, permanent immunity from criminal prosecutions for former presidents. We've never heard that before. This is definitely, as many things with Donald Trump, something that's unprecedented. And the justices were extremely skeptical, I would say, most of them, of that broadest possible claim that Donald Trump is making. There did seem to be some interest in providing some protections for presidents for clearly official acts, keeping those in some ways protected from criminal prosecution. But what I heard today from the justices was really a reaffirmation of the very important principle that goes back to the very beginnings of our nation, that no one is above the law, including the president, perhaps especially the president. You know, when our Constitution was drafted, it was very important that our chief executive not be a king. And absolute immunity was something that the king obviously would have enjoyed in Great Britain, and something we did not want to replicate here in the United States. So the Supreme Court, of course, seemed to recognize that, and were troubled by the assertion from Donald Trump's lawyer that he should be entitled to this type of immunity. You know, some of the arguments were about line drawing. You know, what actions might be immune from criminal prosecution, and that's very few.
Well, speak to us about that, the difference between an official and a private act. How is that being redefined right now?
Yeah, so They were trying very hard not to redefine it, but rather to try to draw lines based on what we already know. So the lawyer for the United States, Michael Dreeben, did a very good job of saying, there's a few core things that only the president can act, for example, recognizing foreign nations or making appointments where that's just beyond the reach of congressional legislation, including criminal laws. But pretty much everything else is fair game, except if there's an as-applied challenge, which is very legalese, but basically it means that otherwise the president can be criminally liable if the facts suggest. One thing that I thought was extremely interesting that came out today was several justices, notably Amy Coney Barrett, questioned Trump's lawyers very closely about the indictment from Jack Smith and said, okay, let's go through some of these acts. What he was trying to, assuming the indictment is correct, and that was an assumption that Trump's lawyer had to do, when he was trying to find these votes, when he was trying to get this fake slate of electors, was that an official presidential act or was that a private act? And Trump's lawyer did concede that several of these indicted actions were private and not official, even under their definition. And what that means is that the trial could go forward even if Trump's argument about official acts were to be accepted. And I'm not sure it will be. It's
really important.
It's very important. Now, of course, the question then gets to timing. Yeah. But I thought it was really important that there was that concession that the trial could go forward, at least in some way.
Well, and it's worth keeping in mind that while we did see specific questioning around the case here in Washington, he's claimed immunity from prosecution in the documents case as well down in Florida, which is another federal case. So how are all of these things potentially tied together? What implication could there be, not just for the case in Washington, but the case in Florida? And then also, I'm assuming this doesn't apply to the state cases like in Georgia for the election subversion, because there's multiple criminal cases that we're dealing with here.
Yes, it's a little hard to keep track, but for sure. So he's also claiming immunity, exactly right, in the documents case in Florida.
Shortly expecting the results of the Fed reverse repo operation.
Especially in terms of the timing, is that if it isn't finished before the election, and if Donald Trump were to win re-election, because it's a federal case, presumably once he took over the Justice Department, he could make it go
pardon
away.
And
Yes. That is not the case, of course, when it comes to this newest Arizona indictment or the New York case that's currently underway, because those are state criminal indictments. So that's an important distinction.
It absolutely is. As we spend time with Elizabeth Wydra, President of the Constitutional Accountability Center, Supreme Court litigator, we have a voice of experience here at the table, and I want to ask you about history, precedent here. 2020, the Supreme Court rejected Donald Trump's claim of absolute immunity. To what extent could that lead us to a decision here?
74 counterparties take 443, spot 928 billion at the Fed reverse repo operation.
Back on the most extreme legal claims that Donald Trump has made. He has often, whether it's the election fraud, so-called election fraud claims that he did bring before courts over and over again, and he was repeatedly rebuked on those, even by judges that he himself appointed. So he's often lost on these major legal claims that he's brought before the court.
They seem to be questioning that today, though. Are you sensing that this is a different conversation than we predicted or expected?
I think what they are, concerned about is drawing the line. I think in some ways the indicted actions here, the alleged actions in this particular case, subverting the will of the people, trying to stop the peaceful transfer of power, which go to the very heart of American constitutional democracy, that seems pretty clear that it's not within, the president's duty to take care of the laws, to violate them. But I think they are concerned, as they should be, the Supreme Court, about what happens in the future. So that's what I think a lot of what we heard today was about.
And we have less than a minute left, but to go back to your point about the thinking of the founders when they were actually forming our system of government and writing the Constitution with the separation of powers in 3 different branches, if you are a strict constitutionalist, is there any other way to read the question here and to read the document that would suggest that there is credibility to Trump's argument if you are a strict constitutionalist?
Absolutely not. So there's some times where history is ambiguous. This is not one of those cases. They sold the Constitution to the people in part because this president would not be a king, and in part because he could be potentially criminally liable if he committed crimes, which is a major change from the British system. So If you're an originalist, if you're a strict constitutionalist, there's really only one outcome here, and it's that Trump's really outrageous claim of immunity, unprecedented claim, is rejected.
We're really glad you could come talk to us today. Thank you for being with us on this day of arguments. Elizabeth Wydra, fascinating conversation, especially to hear this from an actual Supreme Court litigator. Keep this conversation in mind as we wait for a ruling in this case. I'm Joe Matthew alongside Kaylee Lines in Washington. We'll assemble the panel next. The political side of this is ahead, only on Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases.
In 10 minutes' time at 1:30 p.m. Eastern, ECB's Panetta speaks in Frankfurt.
Ask a question or visit SearchGo to find answers now.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks are lower, yields are higher, and you can chalk most of that up to the economic data that we got today. The GDP report showing a slowing economy in the U.S. and higher inflation. So that's the worst of both worlds. 7 of the 11 major industry groups in the S&P 500, they're down right now. Worst performing stock in the S&P 500, that's Meta Platforms. After their results after the close on Wednesday, shares down close to 11%. They're spending more on stuff like AI. That's Meta. And then you have companies that sell the hardware that powers AI. Companies like NVIDIA, they're looking up. NVIDIA shares right now climbing about 3.5%. And remember when traders were banking on a March rate cut from the Federal Reserve, then a June rate cut? Well, now it looks like they're banking on December, the end of the year. S&P 500 right now, 42 points lower. That's down to 0.8%. We're at 5,028 on the index. The Dow Jones Industrial Average, 466 points lower. That is down 1.2%. The NASDAQ Composite Index right now is down 187 points. That's about 1.2%. The two-year yield, 6 basis points higher. We're at, well, let's round this up. We're going to say an even 5%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Balance of Power continues with Joe and Kaylee.
John Tucker, thanks. Fun job for John covering the markets today. Fun job for us covering economic data that is apparently causing this whole mess. And it's not only hair on fire in Wall Street, it's also the same in Washington. If you're Joe Biden, you're trying to tell a story about Bidenomics, this is probably not what you were looking for. Indeed, I'm Joe Matthew alongside Kaylee Lines in Washington. The whole narrative kind of changed at 8:30 this morning. In terms of the economy, changed again at 10 in terms of politics. The Supreme Court, we'll get to that with our panel coming up here. But, we're looking at a pretty tough market, and that feeds directly into the conversation here on the campaign trail, whether this is an economy that people trust Joe Biden to handle.
Yeah, I mean, it's just a day after Bloomberg and Morning Consult released our latest joint poll, which showed that Biden is losing in 6 of the 7 swing states, and the economy is very much front and center. Most voters there do not think it's heading in the right direction, and the data today would suggest maybe it is not, or at least to the extent that economists thought, is growth came in under estimates, but the price index came in over estimates. So sticky inflation, lower growth. What does it all mean for the markets and the Fed? Enda Curran is joining us now, who reports on economics for us here at Bloomberg. So, Enda, obviously we're reassessing the degree to which the Fed may be cutting rates this year. It's getting pushed back and pushed back and pushed back because growth has been strong, inflation has been sticky. If growth is less strong, but inflation is still sticky, how does the Fed come down on that? Do they act to shore up the economy, or do they kill inflation no matter the cost?
Well, there's an element of devil
in 5 minutes' time at 1:30 p.m. Eastern, ECB's Panetta speaks in Frankfurt.
The economy grew much slower than expected in the first quarter. That's the headline. But inside the detail, pretty technical stuff, the slowdown was really because the U.S. was importing more goods than it was exporting. That detracts from growth. So there's a kind of a mathematical calculation going on. Headline GDP weaker because of what's going on with trade data. The rest of the parts of GDP were actually okay. Consumer spending okay. Spending on services increased. So the economy is ticking over at an okay clip. But now, within those numbers were some pretty scary inflation data for sure. The core inflation reading came in strong. So what I'm saying is the growth story is not as bad as it looks, but the inflation story wasn't. The inflation data was not good, and that's why rates will stay high.
Michael McKee was explaining earlier that's also why we're not going to call this stagflation. You don't have all the ingredients here, and the job market remains the exception to every rule. It's just powering ahead, which has been a real gift for this administration. But when you consider the reaction on Wall Street and what we're seeing in terms of a rethink on what the Fed is going to do, what are we going to hear next week?
So I was over at our colleague Ed Harrison's desk watching the live pricing on the bets for Fed rate cuts, changing in front of our eyes, paring it all the way back. They're betting now
in the minutes after 8:30.
That's right, and they're now betting on maybe one rate cut this year, 125 basis point rate cut this year. So that's not a lot of relief if you're a small business or a household, and that of course plays into the political cycle as well. You now have a headline of slowing growth, even though I'm saying it's technical, but you've got the headline that the economy is slowing down. At the same time, the inflation story is not technical, that's real. That still hasn't come back to target. So that's not a great combination, I think, for the administration in the current cycle.
That's for sure.
All right. I just want to point out as well that we always consider with the Fed financial conditions, because that's what they're trying to do, is have tighter conditions. You have a bond market selling off and a stock market selling off. Technically, conditions are tightening.
Doing the job for
so
the
maybe
Fed.
It is doing a little bit more work for the Fed, and I just wonder how we need to consider that in our calculations.
What's old is new again. Absolutely. Thanks, Enda, for being with us on a confusing day when it comes to data, although the market seems to think it's got things figured out. Moving on to our panel here, Kaylee, it's not just the economic news and the market reaction today. It's a very significant set of arguments being heard before the Supreme Court. They've actually wrapped their session for the day. The arguments over Donald Trump's claim of presidential immunity. Our signature panel is with us now. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, having heard some skepticism from swing justices when it comes to Jack Smith's arguments against. Jeannie, I wonder your thoughts today. This could go a couple of different ways, but based on what we heard, and I realize we're reading tea leaves, we're trying to understand what the justices mean with their statements and their questions. This day actually went better for Donald Trump than a lot of people thought it did, didn't it?
It really did, and I think back to when they granted cert in this case. I think that's when I was most surprised, because I thought for sure this close to an election, they would let the circuit court's decision stand. They did not. And so that was the biggest surprise. But once they had done that, I think the thinking was for most of us that they would put this to rest fairly quickly. They didn't do that. And now, based on the oral arguments today, it looks like they could send it to a lower court. We certainly won't get a decision from them, arguably until late June when the term ends. And so this is a win from Donald Trump just from the calendar perspective, because it really won't give enough time to have the January 6th trial before the election. And of course, even if they have the trial, you are so dangerously close to an election.
Shortly expecting comments from ECB's Panetta.
That raises all kinds of questions about the political machinations of the court in the electoral context. So I think it was a win for him as far as the schedule is concerned, at the least.
Well, Rick, as we consider the potential political ramifications in terms of the election cycle itself, obviously Trump's base of supporters, as we know, has been proven time and again, is not likely to leave his side, believes that he is being targeted by this Justice Department, it's being weaponized against him. This is a witch hunt. Whereas those who are not in Donald Trump's camp believe that he's done things wrong, deserves to be prosecuted, what have you. There's already two very firm sides here. So I just wonder the basket of minds we're realistically thinking about that would care whether or not he goes to trial, that care about the outcome, that will change their vote because of it.
Yeah, I think I'd be watching two distinct groups. One, we know from our Bloomberg swing state survey that anywhere, depending upon the state, from 6 to 15% of Donald Trump supporters are willing to not vote for him if he is, quote, convicted of a crime. And that goes without saying for now which court case includes. I think it's general enough to say if he's convicted of a criminal act, he loses support, some of it, amongst that group. Then I would also say there are the undecided voters, and there are plenty of them in some of these states. And the main focus of the Trump campaign and the Biden campaign has been to how to have a conversation with them. And these are primarily suburban women voters. And they could determine the outcome of the election regardless of a conviction or an acquittal. And this isn't the kind of topic you'd want to be having 6 months before a presidential election with a targeted voter like a suburban woman. Hey, I won today. I've got immunity. I can do whatever I want to do. That's not I don't think that's going to be in any TV commercials coming out of the Trump campaign. Yeah, I think it's a problem. I think it delays the conversation that they're trying to have. And of course, there's these ripple effects. Today, a targeted state, Arizona, has announced 18 defendants are indicted because of election activity, including a unindicted co-conspirator named Donald Trump, whose name will be on the ballot in November. I would say I'd rather have a good, clean win in Arizona than worrying about what's going to happen in the Supreme Court today. Today was a bad day for Donald Trump in Arizona.
Well, this is all super important, Jeannie, but you can see this coming, right? Unless the Supreme Court completely rules against Donald Trump, if there's any sunlight here, you can write the Truth Social post now. Vindicated. We brought our claim to the Supreme Court and showed the world that Joe Biden's weaponization of government was illegal. And that's going to be the perception, right?
Yeah, that's going to be what Donald Trump and his campaign team say. Quite frankly, what else can they say? So that is what they're going to say. I don't think we know yet how this plays out. I am a pollster, but one thing we know about polling is it's very difficult to poll people on future behavior, particularly when they don't have a good sense of the scenario. So, we always ask them who they're going to vote for, or who they support. But to ask voters, what you would do if somebody is acquitted or if somebody is found guilty, it's really hard to know, at least for me as a pollster, if you can trust the data coming out of that. So we really are truly in uncharted territory in terms of how this all plays out. Donald Trump will surely say that this was a witch hunt and he was vindicated by the Supreme Court if that happens. But I'm not sure how that lands with these voters. So we really have to wait and see. It's one of the cases in which, for me as a social scientist, there's not a lot of research you can do to get to an answer. And we can't look back in history because we've never been here before.
It's a point very well taken, Jeannie. And of course, Rick, the other side to this is that it's not just about what people do with their vote. It's also about what people do with their dollar. And to this point, Donald Trump has proven an incredible ability to fundraise off of these legal challenges, at least since his court trial has kicked off in New York State, where he is again today, mind you. He's been able to raise millions of dollars. So how should we be thinking about that dynamic here as well?
Yeah, everything is relative. His first quarter fundraising lagged his previous fundraising in 2023. So sure, he is raising money today while he sits in the court, but he's not raising as much today as he did a year ago today, if under the same circumstances. And he is plowing more and more of that money into legal fees. So the net to him keeps getting smaller. So smaller overall base, smaller ability to spend. And we even saw data off of this report that Obama for the first time surpassed Trump on small dollar donors. That used to be what Donald Trump had as his special sauce. He had more small dollar donors than anybody, and those people would be with him no matter what, thick and thin, and that money would just roll in. So those times may be a changing.
All right, Rick Davis and Jeannie Shanzano, our Bloomberg Politics contributors. Point well taken from Rick on Biden pulling in those small dollar donations as well. There's so many different facets to this conversation, and we're keeping our eye on the court, not just here at the Supreme Court in Washington, but up in New York as well, Joe.
Yeah, we've got a lot more to follow here on Balance of Power. This is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. We do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of
ECB's
time.
Panetta says small rate cuts would counter weak demand and could be paused at no cost, and we must weigh risk of monetary policy becoming too tight. And large rate cuts could create a credibility issue. Hesitations in adjusting rates would hurt investment and productivity.
climate change?
Timely small rate cuts would counter weak demand and could be paused at no cost.
Significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? It's just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
ECB's Panetta says the ECB is likely to remain restrictive well into 2025.
The awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto. The people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages, they are lower, but off the worst levels of the session right now. The economic data that's driving things, the GDP report that we got this morning showed slowing growth and a higher rate of inflation in the U.S., and that's a combination that initially really spooked investors. Again, the major stock averages falling, yields are jumping. Meta Platforms helping depress the risk sentiment after its earnings report. That was late yesterday. They're going to spend billions of dollars more than previously anticipated. Again, the worst performing stock right now, the S&P 500. Two more of the so-called Magnificent Seven cohort of stocks. They report their results after the close of regular trading today. Of course, that would be Microsoft and Google parent Alphabet. And right now, S&P 500, 28 points lower. That's down about 0.6%. Again, off the worst levels of the session. Right now at 5,042 on the index. The Dow Jones Industrial Average, 372 points lower. That's down just about 1%. And the NASDAQ Composite Index, 134 points lower. That is down 0.9%. That two-year yield, 6 basis points higher, right at 4.99. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Balance of Power continues with Joe Matthew and Kaylee Lyons.
All right, John Tucker up in New York, thank you so much, reminding us it is an important day in terms of economic data as we got lower growth, higher inflationary pressures. Not a great combo for President Biden. But of course, here in D.C., we also have been distracted by a few other stories, including arguments at the Supreme Court, Joe, talking about basically the powers of a president and where they may stop or continue when it comes to criminal prosecution. Yes. That's what has been been grappled with by the 9 justices and defense attorneys for Trump and other attorneys for the Justice Department.
You're the first to describe these arguments as a distraction today.
No, I'm just saying.
I keep hearing the word pivotal surrounding this,
yes,
Kaylee, but
you're
no,
right. This is not a sideshow.
You're
this
making
is the
me
main
laugh
show.
because this is Kaylee Understands. This is one of these days in the news business where it's pretty hard to have competing headlines on this level. I mean, we have 4 top stories today. Mm-hmm. The thing about the Supreme Court arguments, though, is that they will have a lasting impact, this ruling, on not just whatever happens to Donald Trump, but every remaining president, including the guy who's in office right now. So, yeah, look, we're here in the swamp where FOIA man enters the fray. This is the new Big Take DC podcast. Did you like that dramatic turn? Thank you. I'm trying to follow the bouncing ball here as Saleha Mosin joins us at the table. We do this every week at this time as the podcast drops. And FOIA Man is somebody that we want to hear about because he embodies so much of what people see right and wrong with Washington. Saleha, great to see you. Welcome back to the table.
So great to
How did you meet FOIA Man?
FOIA Man, Joe, Kaylee, he is our colleague, Jason Leopold. He is in our LA
I
bureau.
didn't know that he was like a superhero, though.
He's a superhero. He has hundreds of thousands of Twitter followers, and government officials and agencies across Washington are scared of him and his FOIA requests.
Well, we should probably explain FOIA requests,
Let's
right?
do that.
It's if you want to get information from the government, you file a Freedom of Information Act request to secure that, right? That's essentially what it is. Maybe sounds easy, but it's not necessarily always as easily done than said.
No, you have to know your agency, you have to know the policy or the issue that you are seeking information on. You need to know the personnel that is involved in that. It's not just for journalists. Anyone, any citizen, any organization can file a request. We happen to have someone who has filed the most requests as an individual, even competing with like the New York Times Company or all of Bloomberg put together. He's filed more, Jason Leopold has.
Did Jason know this, or did you discover this in the course of doing this story?
No, he knows
He's
his
a record
data.
holder.
He's a record holder.
Amazing.
He's a redacted record holder,
Okay,
right?
got it.
Everything's
I like that.
redacted. But it's important right now, right? We're talking about this immunity case. We're talking about, we've got elections happening, and we have an electorate that actually doesn't trust people in charge. The average trust
Israel
in
is willing to consider the release of
lows.
only about 20 abductees as part of a deal with Hamas and not 40 as it had been demanded in the past,
Gallup found
Israeli
that
officials
30%
said.
trust the media. That is really low, really low. Used to be in the high double digits, 70, 80%, maybe 40 years ago.
Wow.
So it kind of just speaks to this idea that there is a perhaps even greater lack of trust in institutions that we have seen being compounded in recent years, and that maybe is why you want to try to hold these institutions to account. How much power does an institution have to say, no, I'm not sharing that info with you, it's classified, national security reasons, whatever it may be, you can't have it, we get to keep that under lock and key?
So much power. We have reporters like Jason and others who combat that just through knowledge and just being persistent. But the thinking is that if you want to rebuild trust between the public and the government, then documents where the average voter, the average citizen can look at the report and see for their own eyes, make their own judgment is important. Same with the media. If we can show that our reporting is based on a document that everyone can look at rather than unidentified sources, that trust can be slowly rebuilt.
Thank you for, by the way, delineating. We're talking about freedom of information requests that are part of our business. It's fascinating, I think, for a lot of people to learn that anybody can do this, but you do need some money, don't you?
Oh, yeah. I mean, it takes, they send you CDs. So then you have to have a CD player or a way to read the documents that have been loaded onto the CDs, which Jason does not have. He has to get it converted. They charge you, the government charges him $15 for each CD that he has to then take to get converted somewhere. I don't know, Kinko's where he goes. It does cost money. And then you have to sue. CD player? And you have to sue the government to get information, so you need lawyers.
Incredible. So while this is something that any individual can do, there is a high barrier to entry, you might say.
Someone who call a FOIA terrorist. That's how he's been described because he's so persistent in trying to get information.
Well, sometimes persistency is just the very heart of the job of a journalist, and you just kind of keep at it. So it's interesting to think about what the government is willing to share readily, easily, make it publicly accessible by default almost, and what isn't. Some of those things are easily accessible, say through the Bureau of Labor Statistics with economic data, right? Anything that's happening in the economy for the most part with these certain metrics on a pretty consistent timeline, they're like, here it is. Economists can analyze it how they want, but this is the government estimates of growth or what have you. There's less room for manipulation, I guess, in a case like that.
And they show their methodology, right? And so you can get information on how they came up with their data, which is always good. The more you know about the information you're getting from anywhere, the media, a government institution, a company, the better.
Well, we certainly got that data today, Joe.
That's for sure. Do you have your eyes on this? We've got a problem. Houston. Markets are tanking on this data as everyone kind of rethinks where we are in terms of the economy, in terms of interest rates. And if you're Joe Biden, that's not a good thing.
No, we have Fed Chair Powell last week when all the IMF officials, we had hundreds of economic officials from around the world gathered in Washington for spring meetings. And Powell's big message was that actually we might not see the interest rate cuts that you expect. Now, Biden himself has predicted that there will be a rate cut. And I don't know if we're going to have it. It would be great for him.
That cut at the end of the year, right? Was it going to be the November or I guess the September meeting?
Yeah.
Right.
And we'll be playing that cut of Joe Biden predicting, what did he say? It might be delayed by a month.
Right. And I think he was talking about originally how we thought there would be a cut in June.
Yeah.
So he was maybe forecasting a July cut. Right now, this market isn't expecting anything until December at the earliest, potentially.
He should not be forecasting anything. No president of the United States should be forecasting what the Federal Reserve is doing. And that's something you guys have talked about. We've talked about on the podcast.
They've been super disciplined about that until right about now.
Yep.
But it's campaign season. Right?
It's an election year.
Yeah. So you can hear more about that on Podcast Pass. And, of course, a new podcast dropping today with the FOIA man, Saleha Mosin, hosts that Big Take DC podcast. You can get it at Apple, Spotify, anywhere else you get your podcast. So stay tuned for that. But we want to keep in tune with this conversation around the economy as we're talking about whether or not President Biden is right about rate cuts this year, given the data that we are seeing. And we go now to Catherine Edwards, who is a labor economist, a policy consultant, also writes for Bloomberg Opinion. Catherine, it's great to have you. Obviously, this market is now thinking that it may be the very end of the year that the Fed ultimately decides it's time to ease policy. When you look at the kind of data we've seen today, softer growth, but still persistent inflation, do you think that assessment is about right?
You know, I don't make predictions on when rate cuts are happening, whether I'm president or not. I think it's worth noting how special the time period that we are living in this economy, what has defied expectations. The doomsday scenarios of last summer, we're not really seriously talking about a recession anymore. And, you know, speculation on rate cuts, I think the timing matters a lot to financial markets, but it matters a lot more to households that are facing debt. And I would prefer to see them sooner rather than later before these household debt loads, you know, really start to hurt families.
Okay, so that said, you're a labor economist, and the labor market remains the exception, it seems, to every rule here. It's the reason why, or at least one of the big reasons why we're not calling this stagflation today, why we're not expecting a recession tomorrow. But for how long, as long as rates stay higher, can that exception stay in place?
There are certain tailwinds to the labor market that are completely unrelated to inflation, and that is that we have very shifting demographics. Even though our labor force participation is high, our working age population is not as large a share of the population that it used to be, and that is going to put downward pressure on unemployment that we have. You know, the youngest baby boomer turns 60 this year. You know, our workforce and its relative size is a lot different than it used to be, and that is going to put downward pressure on inflation or on unemployment because we haven't had the same kind of type of demographic distribution. So the example I give is, you know, the last time we were fighting inflation to this degree in 1980, you had a lot higher unemployment because, of course, you had a very large mass of very young people who are, you know, the first ones laid off, people who can be rehired a lot more quickly. And we don't have that same type of distribution today. That's a tailwind on the labor market, that the baby boomers are leaving and that you have essentially a relatively smaller workforce, not an absolutely smaller workforce. In the same way, I would, when it comes to rate cutting and thinking about what's going on in the economy, I think there's a question of going back to those demographics and how they're influencing the labor market, but how they're also influencing the efficacy of interest rate policy.
Well, that is a really interesting question, Catherine. And actually, Chairman Powell has been asked about this. I don't think at press conferences, but in some of the fireside chats and Fed speak kind of things we've seen from him about whether the interest rate mechanism is really one that is still working as intended, given the resilience we have seen in the economy and in the labor market, despite the fact that we saw this incredibly, almost unprecedented increase in the Fed funds rate. So if it's not as easy as interest rates, are there other ways we should be thinking about this post-COVID economy and what it is subject to, manipulated by, dependent on, if that makes sense?
Yes, I mean, Powell has to talk about interest rates because, that's his toolbox. He can't
that's what he has.
That's what he's got. And I think, some of the questions there are how effective is interest rate policy if you have such a large share of homeowners that have refinanced below a 3, right? It doesn't matter what goes on with interest rates. I don't have any other debt besides my house, and I am not taking on new debt anytime soon. That's a very large chunk of the consumer base. And then you're going to have an even larger chunk that is, the set of households that really have no room to reduce demand. At the bottom of the income distribution, you're looking at 40 to 50% of regular spending is just on food, right? It's not as if they have a lot of, room to cut in terms of their budget. So you've got some people who don't have room to cut demand. You have some people who don't really feel the need to because interest rates aren't touching them. This raises some really big question marks for interest rate policy. But I think probably the most telling thing is we have this GDP report come out and we don't really rush over to see what Congress thinks about it because the kind of assumption that is right is that they're not going to do anything. Fiscal policy is a policy that can be used, especially during extreme times. We use it during recessions, but we have not seen them really talk about what would a fiscal inflationary policy look like because fiscal inflationary policy is raising taxes.
Catherine Edwards with us, labor economist, policy consultant, Bloomberg opinion contributor. With all of that said, and I'm not going to ask you to predict the next rate move, Catherine, but how important will tomorrow's PCE data be in confirming what we're feeling and seeing today?
Yeah, there's a lot of pressure riding on this report, which is such a ridiculous thing to say considering the numbers already done, right? It's not as if anything can change to influence what it'll say. Expectations are growing, but it's worth remembering we always talk about this 2% target, but CPI between 1990 and 2020 averaged 2.9, right? So we're so much closer than 2.0, right? We just have to it's really less a 2% target so much it is an under 3 target. And it's helpful to keep in the back of your mind just how far we are from the finish line, but also to be, I think, very fortunate that the conversation we're having now is when will the rate hikes ease? When will the rate cut come? When this time last year, we would have been speculating how high do you think unemployment is going to get, 7 or 8? So we have pulled off some pretty miraculous engineering of the economy so far, and we have problems left, but I'll take these problems over a recession any day.
All right. A little sliver of optimism to end things on today. Catherine, thank you. Catherine Edwards, we kind of needed that. Labor economists, look for her work on the terminal OPIN-GO. I'm Joe Matthew in Washington alongside Kaylee Lyons. We've been watching the markets react to the data, and we'll have a lot more on this coming up, including a really important, Kaylee, after-hours session today. Bloomberg Business Week with Carol Master and Tim Stenevec. I hear them now. How you guys doing? What's coming up?
Man, we're trying to strap ourselves in because it's going to be an interesting one. You're right. Yeah. Low growth, high inflation, not what the doctor ordered. And we'll see whether the earnings after the close, Tim, are what the doctor ordered.
I think that was John Tucker, who we all just heard, by the way.
See, groaning and
very noisy, very disruptive.
He makes a lot of noises in here. We're just saying.
John Tucker doing God's work in a sell-off day. Thank you, guys. Kaylee, I'll see you at 5. Bloomberg Business Week starts.
names in global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable, not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
It meant that you always look different because you were the first woman, or the first brown person, the first Asian, the first Indian, the first person of color to lead a global luxury brand. You're always the first. You're always underestimated. People don't know exactly what to expect. They're suspicious of what your agenda might be.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. I'm Carol Masser along with Tim Stenevec. Let's get to the setup on this. What do they call it? Little Friday?
Thursday's Eve. Friday's Eve works. Thursday's Eve, I guess, should be less.
We call it Thursday.
Nobody calls it any of these things.
We're going to play it straight. It's April 25th, 2024. Earnings still top of mind, everybody, but we've got stocks. They've been under pressure, though we're off our worst levels of the session. No doubt about the economy, Tim, front and center again.
Yeah, today data showing the U.S. economy slowing as inflation jumps. It's not a good combination.
Yeah.
So we got a roundtable on the economy and the reaction when it comes to the U.S. rates market, because we are seeing rates higher across the curve.
Also, folks, what you need to know about Meta's sell-off today. It, too, is off its worst levels, but still down about 11%. So we're going to get into that. We're also going to get into another of the Magnificent Seven that reports after the close of bell. We, of course, mean Alphabet.
Also, Airbus just out with earnings. We got the company's CEO, Guillaume Ferret, joining us a little bit later on the results, impact, and the outlook, and also what's going on with Boeing's woes and how that affects Airbus.
And one more thing, everybody. Hey, team, skip the chicken. So says Chipotle to its employees. We're going to get into all of that on this Friday's Eve.
That's much better.
On the day's top stories and a look at that trade, because we are off our worst level, certainly on the equity side of things. Let's get to John Tucker. He's in for Charlie Pellet.
Okay, I'm going to say this for the fourth time, this phrase, in the last couple of minutes.
Because it works.
Stocks are coming off the worst levels of the session. Risk assets did take a big hit initially after that GDP report showed slower growth and higher inflation. That's a bad combination. Initially, it raised fears of dreaded stagflation, but the smart people tell me you take a closer look under the hood, and that seems to ease some of those concerns. In fact, there's still resilient household demand and business investment. And after the close of regular trading today, we're going to get the next two members of the Mag 7 cohort to report. That would be Google parent Alphabet and Microsoft. Still feeling the impact of Meta's earnings. Those shares down right now just about 11%. Investors worried over their spending, but what they're spending on is helping some of the other stocks. That would be AI. spending that benefits stocks like artificial intelligence maker of chips, NVIDIA. Those shares, they are up right now just about 4%. Overall, the S&P 500, 23 points lower. That's down 0.5%. We're at 5,048. The Dow Jones Industrial Average, 336 points lower. That's down about 0.9%. The NASDAQ Composite Index, 112 points lower. That is down about 0.7%. The yield's still elevated. In fact, traders now betting on one hike, and that would be at the end of the year. 2-year up 6 basis points. That's at 4.99. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Carol and Tim.
Can't say it too much. Stocks off their worst levels of the session. Hey, a rebound.
It works.
It works. All right, we're going to call this an unwelcome combination. U.S. economic growth sliding to an almost 2-year low last quarter, while inflation jumped to uncomfortable levels. John just talking about all of this, interrupting a run of strong demand and muted price pressures that had fueled optimism for that soft landing sigh. That soft landing, Tim, it feels like maybe not going to happen, at least not for today.
At least not today. With more on today's data and the reaction in the U.S. Treasury market, back with us is Bloomberg News international economics and policy correspondent Michael McKee. Also, Bloomberg News rates reporter Michael McKenzie, both here in the studio. Michael McKee, I want to start with the data on growth and inflation. Just break it down for us and what exactly has folks so concerned.
Well, the number came in worse than forecast and certainly down from the fourth quarter's 3.4. We had 1.6% growth in the first quarter, but it really wasn't as slow as it appears because at least as far as people like the Fed would be concerned, because a lot of it was trade. We imported a lot more than we exported, partly because of the strong dollar, and it's cheaper to bring in imports. And if imports are coming in, it does suggest that retailers and others are anticipating they can sell this stuff.
Yeah.
Consumer spending, 2.5%, not as bad as it could have been, down from last quarter, but still reasonably good. Business investment, still strong, 2.9%. Inventory is another problem. Inventories weren't as high, but inventories in trade are very volatile. So overall, it's not that bad a report. When you take out inventories and trade, you get a 3.1% growth rate. So not too bad. What worried everybody, and this is Mike's people over there, is the PCE inflation numbers. Now, the government calculates this number quarterly with average of the 3 months, and it also does a month by month. And what ended up happening is a big jump of 0.3% in the year-over-year numbers for both headline and core. Core particularly concerning people. Mm-hmm. And so that's what the market's focused on and started falling out of bed because of. Now, we've gotten the monthly figures for January and February. We get the monthly figure for March tomorrow. Right. And the question is, was this a problem all across the quarter? Was this a problem in January and February and they had to revise those numbers? Or are we going to have a big negative surprise tomorrow?
So if March comes down, we wouldn't be so worried.
We wouldn't be so worried. If March comes in as forecast or goes a little bit lower, then you'll watch the markets melt up tomorrow, probably.
Well, I don't know if I want to say melt up, but we definitely have seen a move up once again in terms of the Treasury curve and yields. So, Michael McKenzie, come on in on this. Talk to us about the rate moves that we saw today and the significance.
Well, it's a classic. You get a hot piece of data, another hot piece of inflation data in particular, which has been the story for all this year. And as Mike just said, if you see some relief tomorrow from the March number, you might get some stability here in Treasuries. It's been interesting this morning. We did get above 5% in the twos, but the buyers came back. We're right around that 5% level still. 10's got above 470, came back a bit as well. The 7-year auction, nice concession, so they took down the 44 billion of 7-year notes just now. So in general, the markets, the Treasury sold over 180 billion of coupon debt this week, 2s, 5s, and 7s. There's a lot of supply. The problem is, of course, if the inflation numbers remain sticky tomorrow and it indicates that there is no relief near term, you've got a refunding coming next week. Mm-hmm. And that announcement's going to keep putting supply on the table, particularly because the refunding is quarterly. They set out what they're going to sell for the next 3 months, and I suspect the 3-year will be fine. It's the 10-year and the 30-year, the longer dated stuff, and that was selling off a lot today as well. So you could see a further test coming here of 475 and higher in 10s, for example, because we're pricing out the rate cuts for this year now. We're down to just one. I was talking to an investor this morning who always said it was going to be one this year, and they're feeling pretty good about this now.
Yeah.
And they're advising you should start scaling into